Morning all, how are we all doing? How's everybody this morning? Sorry I'm late, I'm always late on a Thursday. I have spin class in the mornings on a Thursday, so it's always a rush and I'm always a sweaty mess. Anyway, I'm here. How's everybody doing? Morning to you, Armand. Oh, you've gone gold. You've gone gold in chat for some reason for me. I don't know why that is. Virginia, morning. Daniel. Oh, everyone's changed colour. That's weird. Everyone's a funny colour today. I don't know why that is. Not normally. Morning, Anna. How weird. Anyway, you're very colourful this morning. I'm probably a bit red as well. Morning, Seymour. Right. Just want to quickly go over the news first thing, because I haven't actually looked at the news this morning or overnight. So we'll have a look at that first. Morning, John. Morning over there. Morning over here. Just to remind you all, there's no live room tomorrow because it's a bank holiday in the UK. So there's no live rooms tomorrow. There's no live rooms on Monday. So you're on your own. If you've got the EA, doesn't matter. Does it all for you. Nice buy on Euro US dollar. Is that? If you like it, take it. Right. Morning, John. Morning, Stevie. Right. So today we've got Canadian dollar rates today. So we had a big push on the US dollar yesterday. I say a big push. We had a bit of a push yesterday on the US dollar on the PMIs. So as usual, obviously, figures come out negative, has the opposite effect. I don't think the PMIs really did an awful lot, obviously, as the manufacturing didn't really on Monday either, because we're waiting for the unemployment figures on Friday, tomorrow. That's the main thing. So this afternoon, we've got unemployment claims. So if unemployment claims are up, that usually means the unemployment rate is down. So if the unemployment rate is going down, that's bullish for the currency because it puts less pressure on them not increasing interest rates. So if we get the unemployment coming down, it gives them more leeway to put up to 5.25 interest rates. So we'll see what happens this afternoon with the unemployment claims. They might give us a little indication as to what the unemployment rate is going to come out as tomorrow. But we've got the unemployment rate today for the Canadian dollar, forecast 5.1. So again, if that comes out as a negative, we may see a drop in the CAD, but it is actually positive because it allows them to help put their interest rates up a little more. So the Canadian dollar is sitting at 4.5 with no increase on the last interest rate. Inflation is 5.2. That's coming down nicely, which is why they haven't increased their interest rates, because they're getting on top of inflation. And that's the primary reason interest rates are going up. GDP is stable and unemployment was stable. So everything is pretty stable on the Canadian dollar at the moment. It's doing well, it's strong. The economy's not doing great, but everything else is going to plan. So it's difficult to tell what's going to happen to the CAD this afternoon. We may get very little reaction off of this afternoon because the market's already factored a lot of this in. So we'll see what happens, but we're forecasting a very tiny increase. So I suspect we may get a push on the Canadian dollar unless the figures come out really massively off. So we'll see what happens. And then obviously with the unemployment claims coming out in the US at the same time, the US and the CAD are all going to get that injection of movement at the same time. So US dollar CAD specifically, if we get one coming out very, very bullish and one coming out very, very bearish, we'll get a very big move on the US dollar CAD. So we need to be aware of the US dollar and the CAD this afternoon. Overnight news. Let me just scroll back. Haven't had a chance to look at this morning. We've got 5 minutes to the open. No news. Australian trade balance, not worried about that. Royal Bank of Australia, yeah, Australian banks are well capitalized, yeah. Chinese PMIs 57, that's up, doesn't matter. Financial system at risk. No news. Okay, fine. Easy, innit? No news. So we just got to wait, worry about 1:30 this afternoon for the unemployment figures. So we've got a few minutes to the open. DAX has got gap fill, which is just about sort of done, not really much of a gap there. So DAX yesterday, we had a drop. So we had that big, strong push up. So we had 1, 2, 3 up days, one sideways, then we went up again. Now we've come back down again. So this is potentially a flag on a move upwards. So I would anticipate a little bit more of a downside move back into support and then a bounce potentially from there. So we'll see where we go today, but could go either way today. I'm not expecting a massive fast movement. Let's just see if we've got any other news. We've got the Italian PMIs at 8:30 and French PMIs and the German PMIs from the S&P. So there's not really any other news that might affect it this morning. So morning, everybody else. Haven't said hello to. Morning, Danny. Morning, Umar. Morning, Neo. Morning, David. Afternoon, Peter. Morning, Henry. Morning, John. How are we doing? So can I take off my towel now? Sorry. I don't stop sweating for about half an hour after I come back from the gym. Just a sweaty pass. Right. So we've got 3 minutes to the open. So just a quick recap of yesterday. Closed 2.2% yesterday, just closed loads out yesterday. Sitting in 0.92% drawdown at the moment. Got a couple that are going to close out today, probably the Aussies mainly. So yeah, good week, a phenomenal week, 7.1%. So very, very good week on the H1 M5 set files. ADRs yesterday did 2.95%, really big ADR reversals. So lots of good ADRs played out yesterday as well. So yeah, very nice return on that. We did 2% the day before. It's banked a little bit this morning, sitting in 0.8, so hardly any drawdown. That's the H1 that we just looked at. H4 mean reversion did 0.38% yesterday, up 0.6 on the week because we had one down day on Monday, Tuesday, Wednesday, Thursday. Yeah, Monday. No drawdown on it. US dollar CAD struggling to get out of that US dollar CAD, unfortunately, but hopefully that'll push this afternoon. The H1 mean reversion set file, only 0.5% yesterday. That's done 4% this week. 3.5% of drawdown. So this is obviously going to get into more drawdown because it's an always in strategy. It's constantly in the market. It's constantly going to be in drawdown. And it's just a case of keeping on top of that. So monitoring that one closely to see what we get drawdown wise. But so far 6-ish% is what we've kind of got to. So the funded accounts yesterday, I've got 1 minute to the open. Let's just look at those in a minute. Let's just watch the open of the DAX. So we've still got the gap fill on the DAX, basically, which is here, which is 175 ADR. I don't think that's going to get hit today either. So if we can get another down day on our way, we're coming back down here. We've got this little gap here. So this is well within reach today now, this one. There's your pre-market 15. So this little gap here is well within reach today. It's questionable as to whether that was classed as a fill already. It was very close. But that is an easy hit today. This isn't. So this tomorrow, potentially, I think will probably get done. Maybe. They might, it might go in. It could go away from it and never come back. But most of the time, the gaps will get filled within days. So it looks to me like a down day, as was yesterday. It's just been very, very choppy getting there. So no breakout so far. So there's no liquidity at the minute. A little bit like yesterday's open. It was a bit weak, wasn't it? Very lackluster today. Henry, still loving the ADR. What percent returns do you get from the reversal EA? There's loads of videos I've put up on YouTube recently with results. Returns down to the market. So 20% profit. Second to last week in March. The entire month of March was 66% across 4 strategies, not total, 66%, 66% cumulative across the 4 different strategies. So, but typical returns will be somewhere in the region of 5 to 15% a month, dependent on the month and how. But basically, at the moment, market conditions are absolutely perfect. At the moment, everything is just. You can see on the bias scorecard, yeah. Everything's range bound, yeah. So every mean reversion strategy out there will be absolutely killing it. Not just me, everybody that mean reverts at the moment will be killing it because the market is literally doing that. So it's very easy to get in and out of positions very quickly. When we get into a little bit more of a bias, i.e. stuff starts to trend a little bit more, then it'll be a little bit more difficult to extract money, but you milk it while it's there, basically. If you want to return 200, 300% a year, you take the big months. Yeah, some of your months are going to be losers. Some of your months are going to be huge wins. Some of your months are going to be mediocre. You don't have a choice. The market decides what you earn. You don't decide what you earn. So the market will extract what it can extract when the market is moving. Pre-market 15 is broken to the downside at the moment. Did you mention the H1 hedging? Yeah, that one's done. It's this one. Did 0.5% yesterday. 4.5% this week. 3% in drawdown though at the moment. So there's nothing. This H1 set file. It's not getting into trouble on anything at the moment. Like I say, we haven't had any squeezes. Somebody contacted me in Telegram yesterday and was like saying you were going to put a load of money into the market reversal alerts EA. Breakout to the downside on the pre-market 15 is happening on the DAX. They said they're going to put a load of money into the market reversal alerts EA. And they've done like 3 weeks worth of back testing. I was like, well, stop, because 3 weeks worth of back testing isn't enough to tell you whether the market sneezed or not. Yeah, you need 6 to 12 months at least of back testing data to make anything viable. And then you need to take that back testing data on the strategy that you've got working over that period of time and take it and put it over a different period of time in the past and check that it still returns a decent result. Well, it's never going to return the same result, but as long as it's still returning a positive result, it's fine. So, the market conditions at the moment, we're in a sort of calm market condition where there's not a huge amount of volatility and there's a lot of up and down movement. You go and put these exact same strategies over the Ukraine war, you are going to get a very, very different result. When the Ukraine war kicked off, we went into 48% drawdown. Yeah. So you can't take this month or last month or the last week as any indication. Yeah, the market will go where the market goes. You just have to deal with it, which is why we focus on The negatives, yeah. Everything positive, yeah. This Aussie dollar New Zealand, in a minute, that is going to go over there. Any second now, that is just going to get banked, right? Not interested. Anything that's in green, forget about it. It's in green. It's working. So just leave those alone. Your focus as a position trader is on anything that is in drawdown and is getting into periods of drawdown where you're thinking, need to do something about it. That's all you focus on. And as long as any strategy you're running as a position trader, whether it be the strategies that I do or any mean reversion strategy, your focus is purely on what isn't working, only ever, because everything else looks after itself, doesn't it? You don't have to worry about it. So all the time that the EA is running and just sitting in 3-5% drawdown, whatever, just doesn't matter, does it? Forget it. It's just working. Everything's working. So it's nice. Go off, holiday, sit on the beach, drink a Mai Tai, and just wait for the alarm bells to ring. And they will ring. That's what I was kind of trying to say to this person in Telegram was, you've joined the group when we've had a very, very nice calm run. That will end. The calm run will end. You're always going to find a squeeze at some point. Broken out to the other side now. 5-minute opening range break is there. So there's your 5-minute opening range. Break out to the upside. This is whippy this morning. Be careful. So there's your 5-minute opening range. So the 5-minute ORB this morning is long. Morning, it's time. Right, so the Fidel-Chris funded accounts, up to 2.6% now on this one. If only I hadn't had that day. So nearly at target. Target is 5%, so halfway there, basically. I've only got 3 positions on, so I'm looking to get some more exposure on today on this account. This gold trade, if this gold trade works out and we get this strength in the US dollar this afternoon, so we've basically made a new low today. We broke yesterday's low already and we're pulling back. So at the moment, market structure is looking like high, low, lower high, lower low, lower high, looking for the lower low. So this is where I would expect us to return to, which is ADR today. So everything is within reach today for gold to go down. So I'm hoping for an ADR hit to the downside. If we get that ADR hit to the downside, what's that, 800? So that's 2%. So that's not quite target, that's 4.5%. So I've got the pound CAD on and the CAD Swiss. So if I can squeeze another 0.5% out of these two, this is over the line today. So, but I might look at other positions to put on this one. I've had a scan through quickly this morning before I went to the gym, and there's nothing extended. There's no opportunities. If you look at the dashboards, there's no ADRs, there's no RSIs. So there's no opportunities. I can't hit the button on anything because nothing's extended at all at the moment. The only thing we've got an opportunity on is Euro Swiss on the 4-hour. So, which is potentially a little bit of a quick long, but I don't really like it. There's no targets to the upside to speak of at all to aim for. So there's just nothing there for me on that one. So this account, I'm reliant on gold today, and I'm hoping that we're going to get a drop on gold. The other account, which was that one, pulled back some of that loss. Got quite a lot sitting on oil and gold at the moment, and the Dow. So those 3 positions on the Dow, oil and gold, if they all mature today, that's going to be quite a big win. So we'll see on that one as well. But again, same thing on this. I'm expecting a drop on gold. Oil, looking for this gap fill. It looked like it was starting to go this morning. Then we had this big candle put in at this low, yesterday's low. So it basically bounced off yesterday's low, which was pretty much the same as the previous day's low. And then we've got this area here, which is the low of the week. So what I'm looking for is a break of the previous day's low, add a 3rd position, and then a run today, if we can, out the low of the week. And if we can get that run started We're not going to do this today, 200 ADR. I'd be very, very, very surprised if we got anywhere near 200 ADR. But that's where I'm expecting to get this gap fill done. The question is, because this gap fill is off of a fundamental, which is basically the reduction in oil production, this could be orphaned. This could get left behind. And if this gets left behind, I get left behind with it, and I'm going to stop out, and this account will be blown, basically. Well, not blown, but I mean, it'll take a hit of what? What's that? Must be the stop on that one. Can't actually see what it is, but it will take a hit of like 0.7%, $700 rather. So we'll see, but let's hope for gold. And the Dow is the other one I'm in. So Dow, we're just hovering at the moment. Again, we've had a big, strong push on the Dow. We come out and look at it on the hourly. So we had that 1, 2, 3, 4-day push. Then we had the pullback. Then we had an accumulation. And today we are back up in this propulsion gap. All the propulsion gap targets are to the downside still. So I'm expecting a push back down. But we have got this little fly in the ointment up at the highs. Yeah. So this one pretty much I would class as done. This one is pretty much done as well, kind of half done. They are still there, but I would be more inclined for us to come down and sort that first if we're going to continue a push to the upside. So this is a bounce off the highs here. So I'd be looking for a pullback on this move. So a profit take move there. It's difficult to pick a spot. Could come back down to there or there. But regardless, it's within ADR today. So we could get an ADR hit to the downside today, I think, on that. So there you go. So there's the funded accounts. Swiss putting down at the minute. DAX, ORB to the upside is not really going anywhere at the moment. So we'll see where that goes. A bit of a lackluster open this morning. So plan this morning. Morning, Joaquin. Morning, David. How about the pound dollar? Look at that in a minute. Morning, Steve. Morning, Ratib. Euro odd. We'll have a look at that in a minute. So the plan this morning is just to go through all the pairs really and just have a look at everything in a bit more detail because there are no ADRs this morning. There are no RSIs to look at this morning. So everything is completely flat. Everything's played out. There's no opportunities to get into anything. So I'm sitting here waiting for stuff to move. Might close that Aussie New Zealand, actually. The only reason I'm closing that is because it's so close to getting out, and what I don't want to do is just to sit in it all day. I'd rather just have it banked. I've got a little bit too much Aussie exposure on this account, so just going to get out of that one. Right. Henry, I'm in a long on Euro US dollar. I have RSIs on the RSI dash. Is yours clear? I've only got one. Euro Swiss. I think everything else is flat. At the moment. Right. So we'll have a look at the ones you want to look at first of all, and then we'll go through everything. Pound dollar. So if there's anything else you want to discuss, let me know as well. So pound US dollar in the middle of nowhere at the moment. 4 hour, we're just coming out of an H4 RSI extension, that trade there. So we've had a reversal looking for a push down. We didn't quite get into support, which is there. So drop on that one at some point. It's kind of bullish at the moment. This pound is overpriced, well overpriced at the minute. So the trouble is at the moment we're struggling to find any US dollar strength. The US dollar's fundamentals keep coming out as negative, and the market's just what the market is worried about with the dollar at the moment is peak terminal rate. At the moment, we keep hearing people like Mester saying we'll go to 5.25, but 5 could well be the terminal rate. So it's difficult to tell whether we've got there or not. The inflation figures are starting to come down, so that takes the pressure off of rising inflation, which is why I say tomorrow's unemployment figure is going to be key. We went up on the last quarter on quarter. So if we see unemployment coming down, that takes the pressure off. If we see unemployment going up, it's going to put the pressure on maybe one more. So it's very difficult to tell what's going to happen with this. We're kind of teetering at that point. If you think of interest rates as an oscillator, with the US dollar, we're up here. Yeah, yes, it could push a little bit more, but it's more likely that's going to be the next move on interest rates. It could go up a bit more though. So we're you get into the point where you're thinking it can't go up much more. So when that happens, all we're going to see is US weakness, and then obviously the stock market will start to rally again. We'll go back into a bull, calm stock market rally, and the US will start to come down. So it's tricky, but we'll see what the figures are this afternoon. Everything's driven by news, yeah. So I can give you an idea of where I think it's going, but where it's going is based on where the news takes it. So propulsion gaps are to the downside at the minute, lots of them. So I'd have to say it's a short, definitely. What was the other one? Euro odd. So that's pulled up nicely into that propulsion gap. We've got a propulsion gap to the upside there, although that's not really an accumulation, it's more of an A shape. Again, not extended on anything. 4 hour, not extended. Just not extended. It's bullish. Don't know. I'll be looking to short it. We've got a half of a head and shoulders. So propulsion gaps to the downside still in play. You've got propulsion gaps to the upside in play. So where you are right now, there's a shot of either going like that and then like that, or it's going to come like that, and then up there. There's no news on the euro or the odd coming up, so there's no catalyst to drive that at all. So it's really a case of what's the market think of the Australian dollar at the moment, and it's very undecided. Yesterday we undid basically everything, didn't we? So it's tricky to know on that one. Steve, I have shed loads on the RSI dash. Is it because of my broker, IC Markets? I don't know, Steve. There are no RSIs. Check your data, maybe. Could be a broker. I don't know, but I haven't got any RSIs. Check your settings. Don't know. DAX is going. Yep. So opening range breakout to the upside is going on the DAX, which is nice. Stevie, question about the hedging set file. If the trades keep going against you, what does the set file strategy do? Whatever you want it to, Stevie. It's up to you. Will it keep scaling out, or do we need to intervene? You will always need to intervene. Yeah, this is the conversation I had with somebody in Telegram yesterday. I've said this for 4.5 years now in here, not in here, but in the last couple of years in here. There is no holy grail EA. There is no holy grail strategy. There is no holy grail set file. Yeah, position trading works when it works. When it doesn't work, you're going to get squeezed. You get into a hideous drawdown, and it's going to be awful. Yeah, I don't pull any punches, as you know. It's going really well. It's lovely at the moment. But in 2 weeks' time, you'll be sitting in 25% drawdown, papping yourself if you don't do drawdown control. right? So like I said to the person in Telegram, go and watch the bootcamp again. If you're in any way, shape or form thinking you found the holy grail of EAs, you need to go and watch this bootcamp from day 1 to day 5. I also wanted to bring this to your attention as well, yeah? Look at the views on day 1, 8.1K. Then look at the views on day 2, 4.4 thousand. Then look at the views on day 3, 6.4K. Yeah, which is where I explain all the indicators and everything. And then the others have got 4,000 views as well. So what people are doing, and this is where I think this confusion is coming in, the fact that this EA is going to make you a millionaire and never going to need to touch anything again in the charts and not be a trader anymore, is that people are watching day 1 going, oh, that's position trading. That's brilliant. So you don't use a stop loss and you just get in and out when the market moves up and down. What indicators do you use that? Oh, brilliant. Off we go. Let's go and buy the EA. Not paying any attention to these 3 days, which are the most important days in the entire bootcamp. Everybody's missing multi-time frame analysis, elastic band theory. Why the hell is this strategy working? And what do you do when it goes wrong? Day 4 in the bootcamp, in my opinion, if you haven't watched it, you shouldn't be trading. And, you know, this not just one person. There's a few people contacting me saying, what do you do if the EA keeps trading and the market doesn't go your way? So why have you bought the EA if you don't know the answer to that question? Honestly, you should never put anything on your chart if you do not fully understand exactly what that EA is doing, why it's doing it, the method and the theory behind what it's doing. Because when it goes mental and you suddenly fly into 35% of drawdown within a week, don't come crying to me, basically, is what I was kind of saying to the person, because that is what's going to happen. And you need to understand it. And if you'd have watched the bootcamp, you would know that that is this what's going to happen. If you go back through the live rooms, yeah, there's plenty of them. If you scroll back through live rooms and just go and pick one at random, I don't know, somewhere back in the past, yeah, go and pick a few of them, watch them on 150% and watch my P&L. Watch my P&L change from 3% in drawdown to 18, 20% in drawdown, 5% in drawdown. Yeah, it's like this. What we're seeing at the moment is a beautifully calm market, pound New Zealand ADR, a beautifully calm market. Yeah, flowers growing everywhere. There's a big dragon over the hill. He's about to come over and breathe fire all over our flowers and make it a nasty mess. Yeah, you've got to be aware that's coming. I don't want to be a doomsayer or anything, but got to understand that is reality. So basically, to answer your question, Stevie, in a very, very long-winded way, you've got to do aggressive drawdown control. And this is the bit that people are missing. Aggressive drawdown control is a necessity. It's not a nice to have. I've done aggressive drawdown control in here twice in the last 2 weeks. People have seemed to have missed it, which is fair enough because obviously people can't come to every live room. But I've had to do aggressive drawdown control on the pound New Zealand. Yeah, look at the state of this. What a mess. Aggressive drawdown control. Get out of that. I did aggressive drawdown control on the pound CAD. Yeah. 2. So the EA, if you look at the settings on the EA on the hedging set file, for example, what the EA will do for you automatically on this one, and you can answer these questions yourself, is at 1.5 ADR against you, it will scale out of 30% of your position. And it will continue to do that. Every 1.5 ADR against you, it will scale out of 30% of the available position, yeah? But as I said to the guy in Telegram, if you go and look at the Aussie dollar, New Zealand dollar, which I got into before Christmas, yeah, when I hit the long button there, I didn't get out. There was no exit. You can't get out. And if you had got into Aussie dollar, New Zealand dollar, Aussie dollar CAD, Aussie dollar Swiss, Aussie dollar yen, Aussie dollar US dollar, all at the same time there, by the time you got to there, you would have blown your entire account. because exposure would have been too much. Aggressive drawdown control wouldn't have been enacted, and the whole thing would have gone pop. So the EA is a tool to help you position trade in the fact that I want to get into trades when the 4-hour RSI is extended and we get a reversal alert on the 5-minute time frame. So get me into stuff, brilliant. And if it goes against me, I want you to continue to get me into stuff, brilliant. But I'm the trader. I am in control of what charts I put my EA onto, and I am watching this like a hawk 3-4 times a day to see what is going on. And if stuff is getting to the point where I'm thinking I don't like this, I will close some of it out manually myself. The EA is not going to do this for you. The EA is not a trader. The EA is a dumb, blunt instrument that you put on a chart, and when a condition is met in the market that you have programmed it to, it takes a trade. That is all it does. It's not a trader. It's not a holy grail bot that will generate a 70 to 100% return on your account every quarter. It's not going to happen. So I just wanted to clarify that, because there's a few people recently have been asking. I'm not having to go at you, Stevie. Obviously, I'm just saying you've brought up the subject which I wanted to talk about at some point this morning, which is great. Thanks for that. But yeah, so I just wanted to hammer that point home. Yeah, this is not a sit on a beach, drink a Mai Tai, and it says that in the boot camp on day one. There's a picture of a Mai Tai and a beach. Or actually, no, it says it in, I can't remember which one it is. It's the one of the videos. But that's my whole point. There is no EA out there that will just make you money. It doesn't work that. And we had people saying in the Telegram group this morning, and this is why I have to say these things. Yeah, there's people saying in the Telegram group, it's a license to print money. Not a license to print money. It's a license to lose every penny you have if you don't know what you're doing with it. Same way as you can get in a Ferrari and drive it. If you don't know what to do when the back end of that Ferrari goes out at 200 miles an hour, you're going to die. Same with an EA. Yeah, if this thing goes out of control, at some point you need to know how to steer the thing. And if you haven't watched the bootcamp in full and understood why it's doing it, what it's doing it, the whole methodology, what you need to do in emergencies, when your emergency trigger is yourself, which you need to find, you're not going to be able to get out of those positions, are you? So there you go, lecture over. I just wanted to cover that. And it's a very important point, which is why I wanted to cover it. So thanks, Stevie. That wasn't having to go at you. I'm not having to go at you. You just brought up what I was going to say. So it's good. I had the same problem with IC, so change broker, David. With RSIs. So what your problem is, I think you will find with RSIs, yeah? So do this experiment now, right? Get your RSI dashboard up and then load up a chart. Open up one of the pairs that has got RSI all over the place, or lit up like a Christmas tree. Pop it on there and just switch timeframes. So to whatever timeframes you've got running on your RSI dash, yeah? And make sure that it matches with that. Because what I think is happening is your RSI dash, from when you've closed it down maybe, it's opening up and it's not reloading live data on those instruments until you actually open those instruments. It's the same as when people say, I've got the ADR dashboard and everything's showing as zeros. That's because for some reason your broker hasn't loaded daily data. So you need to open the chart, go to the daily, and then it will load 10 days, well, it'll load obviously more than 10 days, but it'll load all the data in. And then all of a sudden your ADR dashboard will light up correctly because it hasn't got data. So it sounds to me like a data issue if you're seeing this lit up like a Christmas tree, because it certainly isn't. Not for me anyway. Pound New Zealand, let's quickly look at that. So we've got an ADR to the upside on Pound New Zealand. This is pound strength. So we got pound strength coming through this morning. And obviously New Zealand dollar weakness, I would say. Yeah, so we've got New Zealand dollar weakness and pound strength, obviously pound New Zealand then hitting ADR. So potential area up here. So that high there to there. So that's a good resistance area. There's no propulsion gaps to target on the way down at all there. So not the greatest ADR reversal in the world, but it is just about to get extended on the hourly. So drop down M5 and wait for a reversal. It's not a very good reversal either. It's not the best in the world, that one, at the minute. Right. What indicators EA suggest getting first, as I've got to stretch buying them out a couple of weeks? Can't really answer that one. Whatever you think is the most useful to you, basically. So the market reversal alerts indicator is the core of everything that I do, basically, because this is the signal indicator. So this obviously signals when there's a shift in structure, i.e. we've been buying and buying and buying, and now it looks like the sellers are coming on board. So all it's doing is it's telling you that there's a possible direction change happening. So that's a signal to get in. You can use the RSI on the chart that comes with MT4, obviously. So, if you want to use H1 M5 or H4 M5 or M15, literally all you can do is every hour or every 4 hours, open up your charts and just whiz through everything and just go, yep, that's extended. Euro Swiss, there's a good opportunity to go long. I'll drop down to M5 and I'll wait for a reversal up. Or what you could do is buy the RSI dashboard to monitor RSI. Every time you get an alert on here, then flick over onto Euro Swiss, for example, and say, right, I'll tell you what I'm going to do, because you haven't got the reverse alerts indicator. I will get in when I see them break the Asian high. So you could use a different signal to get in, but it's up to you what you buy and obviously what you use. Obviously the EA, if you want to do position trading on autopilot 80%, 90%, then the EA will do all of it for you. But there's no right or wrong. It's up to you. There's a lot of people that position trade. They don't use my indicators or my EAs or anything. They use their own strategy. Don't forget, position trading is just a methodology. Yeah, it's a way of entering and exiting the market on cycles. Yeah, any mean reversion strategy is designed to take an approach of getting in on extended conditions. That's what mean reversion is. So you're getting in and you're expecting the reversion to the mean. So it doesn't matter what strategy you use. You could use Bollinger Bands, you could use any oscillator, you could use any other signal indicator. You could use Bill Williams fractals. You could use a very fast moving average cross, like a 3-5 or a 5-9 cross or something like that. So there's a number of combinations of things you could use. You might even have indicators already you can cobble your own strategy together with. Obviously, you need to backtest it. But yeah, there's no real answer to that one. It's whatever you want. The gap indicator obviously is free, but that's just this is not a signal, it's not a condition. It's just telling you where price is likely to head to at some point. So it's not a timing tool, it's just an area where we're expecting a reversion to happen. I can't really answer that one, Tom. Whipping Coast, I guess it's because there's a lot of info to retain and people come to you when there's a gap in memory, when something's gone awry. Don't forget your years into the strat. Yeah, I know, yeah. I'm not saying Whipping Post. I don't mind people coming to me and talking to me. It's fine. But what I'm seeing at the moment is a shift in attitude from question, I'm confused about, I don't quite understand, to this is the holy grail, it's going to make me a millionaire. I don't know how many years I've been streaming, but for 3 or 4 years now, I have been an advocate of there is no holy grail. And it worries me when people are contacting me in Telegram thinking they've got the holy grail, because I don't want people to blow their accounts. Yeah. And anybody that's been in here for a long time, of which you have obviously as well, and many people have been watching me for years, they know that I go into drawdown by 15% on a regular basis. And I just think people at the moment are like seeing these beautiful strategies playing out. And yeah, it's lovely when you're sitting in 4% of drawdown for a month. It's great. It's not the norm. And I just want to, just let people know it's not the norm, because I'm not. What's going to happen is, and I know what's going to happen, it's all of a sudden I'm going to get 20, 30 people go, why am I in 10% of drawdown? Well, you've scaled in a quarter of an ADR apart. Well, what's bad about that? And then the light bulb is going to click when it's too late. And that's what I'm trying to stop, basically. I don't want people to get too aggressive. And this is the problem I'm seeing is people are getting a little aggressive. So we had somebody in here yesterday, didn't we? In 4 positions, a quarter of an ADR apart. It's like, I haven't got anything that runs a quarter of an ADR apart. Why are you in a quarter of an ADR apart on your entries? Well, because I'm waiting for it to come back down. Well, what if it goes 10 ADR against you and you've scaled in a quarter of an ADR? You're going to blow your account. You'll only realize when you've blown your account. But that's part of trading, isn't it? We all blow accounts. But some people are contacting me saying they're going to start trading with huge amounts of money. Slow down. Run before you can walk is basically what's happening, I think. That's what I'm trying to sort of, rein it back a little bit. So it will ask, how do I get the drawdown window? Is it part of an EA? The drawdown window. Oh, the Trade Manager dashboard. So this is a Trade Manager dashboard. It's on the website. Indicators, Trade Manager dashboard. It's there. So follow one of the links going along the bottom. Marion, hey, I'm the guy with 114%. Marion, hey, I'm the guy with 114. Marion, I thought you were a female. I'm learning things. I'm the guy with 114% account growth, not at 199%. Thank you once again for changing the way I think about trading. And also gold. Yeah. I'm well aware of drawdown, no problem. I'm just running the hedge on demo. It's made 13% in less than 2 days. But it has opened 72 trades and has 4.5% drawdown. Yeah, see, 13%. This is the thing I'm talking about, Stevie. Day 1 in the bootcamp, full expectation. Try this. You will make somewhere between 5 to 10%, maybe 15% a month. What I'm thinking people are, and I'm not again saying, I'm not talking about you, Stevie. I'm just saying what you've just pasted there is what I'm getting people contacting me with. I say in the bootcamp, 5 to 15% return a month is an average with a strategy, right? If you're returning 13% in 2 days, there should be alarm bells ringing somewhere. This is returned 13% in 2 days. Hang on, didn't he say that he returns about 10% to 15% a month? Must be something wrong. That's what I think is not happening. The light bulbs aren't triggering where people are going, oh, look at this, I just made 10% past the proper valuation in 3 days. That's not right. There should be alarm bells ringing. This is a long-term, safe, tiny strategy. And again, I'm not picking on anybody, but somebody contacted me with a 3K account and made 9% return in 2 days on a 3K account. You have got to be hugely over leveraged to be able to return those sorts of figures in a couple of days. And yet people are not getting it. And this is my problem is not my problem, but the problem. People are watching this. People are watching this. People are jumping straight to buying stuff or executing their own version of the strategy and missing this stuff that is critical. It's almost like I want a checkbox. Have you watched this? I want verification that has been watched for 1 hour and 46 before you are even allowed to press the play button on that video. Once you're 1 hour and 4 minutes into that, a play button is revealed to go and watch this video, and so on and so forth. Because you miss one video, you miss a core part of the strategy. It doesn't matter what that core part is. If you're missing one part of it, it's a massive problem. Because it's a methodology that everything has to gel together with. And I think, it's like 13% in 2 days. It's all right if you know you're doing it, and that's fine. If people know they're over leveraging because they want to go for it and take a high risk, I have no problem with people over leveraging. I've done it. I do it on my prop accounts. Yeah, I over leverage because you can make serious amounts of money very, very quickly. But you've got to know that you're doing it. You've got to know the risks involved with it. Yeah, if you over leverage at some point, you will get burnt with a 100% guarantee accuracy. You're going to get burnt. It's going to squeeze at some point. Look at the Aussie New Zealand. Yeah, I use this example because I was in this. That's why I know it hurt. I was in it. I was long. I was long, 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 long pop. Not pop, negative 15% or whatever it was. I can't remember. It was a negative. Before Christmas, just before Christmas. It was down here somewhere. It hurt. It's a negative month. And I have negative months. Yeah. So, that's just, if you've got, and that's because and it's my fault. I scaled in too fast and I know what I did and I knew I was doing it and I took the rap for it. But just got to, just be careful, guys out there. You're basically playing Frogger and those cars are not going to stop. And your Frogger's going to have to keep jumping forever. Don't forget, Frogger never ends until you die. Which is fine. Just watched enough to see what it does when it goes against you. DD control, and then no problem. Yeah. So yeah, just go and refresh your memory about drawdown control. I need to do a video. I've got a couple of videos actually on. There's a live room extract about aggressive drawdown control somewhere. I should do another one, shouldn't I? I need to do another video on it, basically, just so I can send people to it regularly. How's your back test market sentiment strategy? So the market sentiment strategy has been very hit and miss. So I can't figure out a way to position trade it, basically. And to be honest, I can't be bothered to develop a strategy with a stop loss with it because it takes too long. So I've got variations of the strategy running at the moment. And the problem with this is the sentiment shifts. And when the sentiment shifts, so for example, if we've got US dollar CAD, yeah, so we've got 85% of the market are currently long US dollar CAD, yeah, which means it's a short. And as you can see, it's a lovely short. But where do you get in? And if you try and position trade it, it's difficult to know when the moves are going to happen. So it's got to be a scalping strategy. So I think what I'm going to do is try and incorporate some kind of ADR reversal strategy, which uses pending orders, which will trail price. So what I'm looking for basically is for a push in the direction that retail is, which is basically what the market is doing, is enticing those longs in. Yeah. So it will give them, give the market the movement that it wants. And then it will reverse and will start to go against and squeeze those positions. So what I want to do is, I've been trying to use yesterday's high, previous day's high, and it kind of works, but it kind of doesn't at points. And there's points where it will just turn the other way for 3 or 4 days, and you just go into too much drawdown. So I'm going to look at a strategy which basically has a trailing pending order. As we continue to make new highs, it will trail a pending order until we stop making new highs, and then that pending order will remain there, a little bit like the parabolic SAR. And then that will trigger an entry when the move starts. So a little bit like the market reversal indicator. But there's got to be a market condition as well as sentiment. So you need more confluence, not just sentiment. Sentiment on its own is not enough. We need either an RSI extension, an ADR extension, or something else to give us a market condition as well as the retail sentiment. So it needs 2 elements to it, I think. So it's still under development, but all the ideas I had have struggled, basically. So they're a bit tricky. It's a tricky one, very tricky one, sentiment. Just see what's going on with DAX. DAX has pulled back down. So we're back down pretty much the opening range high. Very wicky this morning. Oh, I got a new John Wick, by the way. Brian did for me. John Wick coin. Like it. I think that says, I don't know what that says. Something win. Thin win? But yeah, we got John Wick coin now. Looking good. I'm using RSI and ADR indicator on IC markets. It runs fine. Yeah, it's a data issue somewhere, I reckon. So can I look at US dollar yen? Yeah, have a look at that in a sec. Steve, sussed it. Notice your dash is only showing H4 and H1. I have other time frames on mine. Ah, right, yes. Obviously, if you're running other time frames apart from the hourly and 4 hourly, then yes, you will have a lot more. There will be RSIs hit all over the place on 15-minute charts. There always is. That'll be why. Morning, Minpo. Welcome back. Long time no see. Oh, Helpy FX is back. Hello, Helpy. Bye-bye, Helpy. Let me just report you. Unwanted commercial content or spam. Right. Henry, John Wayne's real name was Marion. That is true, Seymour. Yeah, I was talking about Marion being a man. I meant to say at 199%. And yeah, I'm a man. Sorry, just Marion in the UK is a female, mainly a female name. So I thought I might add the trade's only 0.2% per trade. I don't know how you've done 9% with a 0.2, unless you're leaving trades to run longer, which is another thing, which is absolutely fine. If you're making loads of money, Stevie, and with very tiny risk, 0.2, 0.25, and you're letting your trades run to 1 ADR and into propulsion gaps instead of getting out at half an ADR, which is what I do, absolutely brilliant. Yeah. And again, this is the whole thing about position trading and about drawdown control and about comfort levels, which is, again, all explained in the bootcamp. Nobody's going to have the same comfort level. And I always, the question I get asked always, and the most often is, when do I do aggressive drawdown control? When do I know it's not working? And there is no answer to that because everybody's got a different level of comfort. I am happy for something to get to 2 to 3% in drawdown against me, an individual instrument. Other people start panicking at 1%. Other people will sit there and go, I'm not really bothered if I get up to 5%. Everybody's different. Everybody's got a different panic level and panic button. And everybody's also got a different ability to hold positions, yeah? And this is where most traders go wrong, is the hold, yeah? Most traders find it very hard to hold trades. I'm included in that. And that's one of the reasons I position trade, because with stop-based strategies, what I was doing was, if I was holding a position and it went to there and got me, say I got in there and I got up to there, at that point, I would want to take the trade off because I've made a decent amount of money. But my stop losses would mean that I would never hold my positions long enough for them to get to my targets. So some people are absolutely brilliant at that. I see traders with stop loss strategies who are specifically swing traders. And if you've come from swing trading backgrounds, you'll find it no problem to hold on to positions. But some people can hold, like 99% sure it's coming up to there. I closed my trade here this morning, look. Why did I close it there? Because I had some decent profit and I'm happy. Some people will be holding it all the way up to 175 ADR and they won't be getting out of that trade until Tuesday or Wednesday next week. And if you can do that, you're going to make a hell of a lot more money than I am. But that's the whole thing about the position trading methodology. It is completely different to everybody. Some people run the EA with no targets. They basically let the EA scale them into positions and they just don't use a target. And they use the dashboard or their P&L to just literally wait for the market to get to a positive area that they go, right, well, let's bank it now. And there's no logic or reason behind it. And again, there's absolutely nothing wrong with that. You'll make a hell of a lot more money than I will. Everybody's different, aren't they? So, but that's great. If you can hold, brilliant. Alan, in other words, stop being greedy, stop being an idiot. Your job is to manage risk. When volatility comes back, you'll get screwed. Basically, Alan, in a nutshell, you've just said what took me about 20 minutes to get out of my mouth. Morning. Yeah, basically. And volatility will come back. Well, I hope it will. Actually, no, I hope it doesn't. I hope it stays like this forever. It'd be absolutely lovely, wouldn't it? It's not going to happen. It's coming back. But this is what, this is one of the reasons I'm keeping a very, very close eye on this and the fundamentals. It's key that you understand why volatility comes. Volatility on an instrument. So, for example, on US dollar CAD, yeah, the volatility on US dollar CAD and the strength and the squeeze happens because one currency far outweighs the strength of another. Yeah. So if the US dollar suddenly says we are keeping our interest rates at 5 to 5.25 all year, and the Canadians come out and say we're happy with inflation now, we are going to drop from 4.5 back down to 2 in the next 3 months, the Canadian dollar's strength will disappear. The US dollar's strength will remain as it is. And what will happen is the US dollar CAD will go into a squeeze because the Canadian dollar will do nothing but drop. The US dollar will do nothing but push. And that's why a squeeze happens. This is why at the moment we have beautiful trading conditions, because there is no fundamental advantage on anything at the minute. Everything is strong or weak in the same spots. Everybody's GDP is suffering. Everybody's inflation is suffering. Everybody's interest rates are going up. Everybody's unemployment is rising. Yeah. Everybody's doing the same thing. Everything goes into a range because everything has the same strength and at the same time, the same weakness. The only time we get big moves is on news. This is why we pay attention to the news. It's all one big pot of information that we need to be on top of everything with. That's the idea of the buyer scorecard, is it gives us a quick overview of what do we want to be doing. And some of these you obviously have to take with a pinch of salt, all the yens, because the yen interest rate is negative 0.1 and it has been negative 0.1 for years and it's not changing. So you can't take the interest rate part of it into account with the yen. So you get the odd false positive. But things like the Euro New Zealand, we should be looking only really to buy. Aussie dollar, US dollar, only really to sell now. Yeah. But again, it all changes with the retail sentiment side of things. We know the market moves the opposite to the retail sentiment as well. So nothing is moving fast or hard enough to get you into any trouble at the moment. But like I said to somebody in Telegram, the first time you know when the market is strong enough to move in, get you into trouble, is when the market moves strongly and gets you into trouble. By that time, it's too late. So you have to take a loss, which is why I say, milk it while you can. Brilliant. But all the profit you've made over the last X number of weeks and months, at some point in the future, you're going to need to use some of that to get rid of some of the losses, because some of this stuff's going to go fast and hard, and you're going to have to just cut it and go, right, I'll take 3% loss there, 2% loss there, 5% loss there. I'll take a 12% loss right now because it gets me out of this particular problem using the 35% profit I've made in the last 6 weeks or 8 weeks or whatever. Yeah, it's all part of the big pot. It's a big picture. It's a marathon, not a sprint. Darren, morning. Can I know your thoughts on crude? Would you think a correction will happen to fill the gap? Yeah, I'm short on crude at the moment. I will go through all the pairs in a minute. Anna, Marion, don't lie, you're a woman. Anna, next thing you're going to tell me is you're a woman. A man. Sorry. You know what I mean. It's been a long morning already. Yeah, so oil, I'm short. Literally, no technical reason, but gap fill. Yeah, gaps get filled. So I'm shorting on the assumption that we're going to do the gap fill. I don't know if we are. If we don't, we don't, and I'll get stopped out. So, don't know on that one. I'm looking for the gap fill at the minute, but it's a big gap. And when you see a gap like that, that hasn't filled for 3 days, it's slightly worrying. So this morning we've kind of bounced off of yesterday's low, which is great. If we can crack the previous day's low today, I think we're definitely going to have a run at the weekly low. What happens at the weekly low is really going to be key. And when we get down there, if we get a strong bounce, I will start to reduce risk on this, because if it bounces here and it holds, we're going to go. So this could get left behind. I find it hard to believe that it would. But then again, if you look back in time over oil, we don't really get big gaps very often on oil. Yeah, we had one. Can't see that one. We had one back here. Fairly on there. We had a fairly big one there. Which you can't see. You just can't. Yeah, you can see. We had one there. Came back. We had one there. Yeah. So the smaller gaps will always get filled fairly quickly. But if you look back through history, recent history, gaps this size, they don't happen often. Probably easier to look on the 4-hour. Look at the size of this. And then look at the size of the gaps we've ever had before on oil. So we had a big-ish one there, straight away filled. We had a biggish one there, got filled fairly quick. Little one there. There's a good example. That's not a bad size, is it? That took a good week or so to come back and sort. Right, there's one. Yeah, so this one here. So let's look at the size of this gap. So that gap was 44 pips, that one there. And that took from the 25th of February through to the 15th of March. So pretty much a month. Then you've got this whacking great gap here, which filled, within a day, basically. So the vast majority of gaps you'll find will fill within a day or two. Occasionally you'll get one like that one, which took a month. Look at the size of this gap compared to those ones we just looked at. We haven't had anything this big for an absolute age. So this, to me, I think could well be one of those fundamental shifts where it's just not going to do it. And it's just going to fly, and that's it. The reason it's gapped is because production has been dropped. Therefore, there is going to be less oil available. Therefore, the price of oil will rise because it's a supply and demand thing. Supply is going to be cut. Demand will remain the same. Therefore, if you want my smaller supply, you're going to have to pay more for it. Oil price goes up. And we thought this was going to be the bottom at the 65 a barrel, and it was. I just didn't get my pullback entry on it. So that's the play. It'll either work or it won't. As with everything in trading, there's a 50-50 shot. So we'll see what happens today. But today, I think, today and tomorrow is going to be key. If it's not done it, by the end of this week, and we're cracking this high, I think that's it. We're off. So I wouldn't try again to get back down to that gap. It's either gone or it's not. So we'll see with that one. I took the H1 hedge set file from the Telegram group and haven't touched it. Did anything need changing on it? No, nothing needs changing. But just don't, like I said, Stevie, when one of those squeezes, it's going to go big into DD at some point, which you need to deal with. Don't remain a tadpole. This job takes time to master. It took me a long time, and that's even with my experience working on a trading desk for most of my life in the city. Yeah, a little bit different, isn't it? Working on a trading desk in the city. But yeah, same. Everything takes time to master. I've said this in here before many times. Yeah, this is the whole problem with this industry, is everybody's looking for the holy grail. Everybody's looking for that way to make money fast. You can't become a brain surgeon without 7 to 10 years of training. You can't become a pilot without spending £100,000 and years of training and experience. Why do you think you can become a 6-figure trader in 2 weeks by buying an EA for 90 quid or 100 quid or 50 quid or whatever it may be? 500 quid, 1,000. Why do you think you can take a trading course for £2,500 and suddenly become an expert 6-figure trader? The whole industry is geared towards selling people a dream that is just not possible to achieve without a lot of hard work. And yes, you can automate half of it, but at the end of the day, you're sitting there with your money on the line, and that's the trading tool. And that's the trading tool that has to deal with it. So you just need the infrastructure in place to monitor what is going on and deal with things when you've got to react. You've got to be dynamic. It's a dynamic industry. Yeah. So right now it's all going fine. You've got to be able to flick that switch and go, right, stuff looks like it's going wrong. We need to get on top of this now and start dealing with it. That's all it is. So, you know what I'm saying? And if you don't, go and watch the bootcamp and all 5 videos of the bootcamp. Not one. Eric, pound US dollar. Already done pound US dollar. Don't know where it's going. Down at some point, propulsion gap targets to the downside. Yeah. And again, propulsion gap targets, absolutely brilliant. They get filled all the time, don't they? Yeah. Propulsion gap targets get filled all the time until they don't. It's the same as everything. Yeah. Propulsion gap targets are brilliant. They always work, always work. Look through your charts every time. It comes back and fills it until it doesn't. And then it goes off and people go, but it's going to go back down there. No, it hasn't got to do anything. This is the market. Market goes where the market wants. It doesn't go down here because you've drawn a lavender line on your chart. It goes where it wants to because the fundamentals of the world drive the currency prices. This is an indication of where it's going to go probably 90% of the time. That 10%, if you don't deal with that 10%, that 10% is going to kill you. I tell it like it is. Jacob, US dollar yen. Right, let's start analysis. US dollar yen. We'll start at the bottom because a lot of people have asked for US dollar yen. So we'll do US dollar yen. So at the moment, it's bang in the middle of nowhere on the hourly. It's bang in the middle of nowhere on the 4 hourly. It's a little bit lower, obviously. The yens basically have had, obviously, a safe haven run. The safe haven run is finished for the moment. Obviously, if the banks start to wobble and fall over again, that safe haven run is going to start up again. So at the present, it's difficult to tell with these yens if we're going to come back and get these propulsion gaps done. We should do, obviously. So it looks like the structure has shifted now. So there's your new peak formation low. There's your new high. And now we're putting in a higher low. So structure is shifting to the upside. Yeah. So it looks like a long. US dollar is talking about interest rate increases again. So there's potential for more movement to the upside on the US dollar. However, obviously the yen is a safe haven. If anything kicks off with Russia, if anything wobbles with the banking sector, there's talk about potentially some kind of new housing crisis. There's bubbling talk about the housing market collapsing. If that happens, it's going to put pressure on the banks. There'll be runs on the banks. There'll be all sorts of things happening again. If that happens, then the yen is going to strengthen up and everything is going to come down in the same way as it did before. So right now, I like it as a long, purely for the fact that we've got more upside targets to aim for than we have downside targets. So right now into ADR 125 ADR, but long term up. If you look at it from a higher time frame perspective, we are potentially just pulling back on a new upward leg. However, if we get to 150, the Bank of Japan will intervene and drive it back down again. So, there's a good example. Yeah, propulsion gaps work until they don't. This is what I call an orphaned propulsion gap. Yeah, it's not a given. There's an orphan propulsion gap. Are we ever going to get back there? I haven't got a clue. What's going to happen in the future? Yeah. Don't know. Yeah, we don't know what's going to happen in the future. Nobody in this market has got a crystal ball. No one can tell you where anything is going. What your job is to get in and manage the position you get into and deal with it. So it's got more upside than it's got downside. But whether it's ever going to get to those big left behind targets, don't know. And obviously they're a long way away. Yeah, look how long it's taken for it to get from this big orphan propulsion gap here down to here. Yeah, this was back in November. We're now in March. So we could be talking about 4 months to get back up there. We could be up there by the end of summer, maybe. But short term right now, there's no opportunity for me because it's sat right in the middle of RSI. There's no ADR extensions. It's just, at the minute, just sitting nowhere. Yesterday, there was a long. And the day before that, there was a long. So you had a long, second long, probably just about getting out of it now, if you got into that one. But other than that, there's nothing really on it but targets to the upside. So you have to say it looks more long than short at the minute. As long as this structure holds, that is. Yeah, so we're looking to go up there. US dollar Swiss. So we broke down below the support that we had. Yeah, so big, strong push down. We came back down, pushed down into the next support, and then we've bounced up from there, pushing back down again at the moment, potentially coming back up into these propulsion gaps again to the upside. That one is, I would say, probably done. However, obviously, it depends on, again, Swiss franc is a safe haven. So quite often we'll get money flying into the Swiss franc when there's not a problem with the Swiss banking system, obviously. So again, we're waiting for US dollar strength to see if we get that strength coming through. If the unemployment figures come out tomorrow positive for the US, we'll probably find the Fed coming out tomorrow and saying it looks like there is easing in the unemployment market, therefore we can up our rates another 0.25%, and it will make it more likely the 5.25 becomes a terminal rate. If that happens, the US dollar will strengthen. Otherwise, it could weaken. We don't know. As I say, nobody knows what's going to happen. So right now, there's a 4-hour RSI extension opportunity yesterday for a pushback up into these areas up here. So all looks good for a bounce. So where we are, obviously just at a low. There's no other lows really close enough to look at. So you'd have to jump out onto the daily to find the level. So this is this level here that we bounced at yesterday. Failing that, you'll be coming down to here and here. So if you're going to get into a long position on this one, you're looking at that level there, and then obviously down to there. So this is a really good level support resistance. So we pushed back down, pushed up, 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 broke through it, came back down, touched it, bounced, bounced, bounced. So this is 200 ADR. So dropping down, if you try and get into a long position down here, I'm in one already. You'll be looking somewhere around about 200 ADR for the next potential support. So if we break that low, that's where we're going to come probably. So initial entry, second entry, hope to get out on that. If that fails, down to there. By the time you get down to there, you'll be massively extended, and then we'll be looking for that big pullback because that move will need a profit take on it. So US dollar Swiss long at the moment, more long than short, but again, nothing, as you can see, nothing's really in a good spot right now today. Everything's kind of played out very, very nicely. So US dollar CAD, you can see in 3 positions on this one already. Again, prime example. Yeah, that one there, I've had to do 2 drawdown controls on that already. Got into it on a 4-hour extension, and it's just done nothing but parabolic down. Obviously, the more extended that gets, the more of a pullback it's going to need. So that profit take is starting to look like it's happening now. We've got the 4-hour RSI, the 4-hour reversal alert in there. We pushed back up, so looking for it to come back up into propulsion at some point. It's very, very range bound US dollar CAD. And again, this afternoon is a core news event for the US dollar CAD. We've got Canadian dollar unemployment at 130, and then we've got the unemployment claims for the US dollar at 130 as well. So 130 this afternoon, this one gets affected double bubble. So Strong pushes up into there. These are your levels to the downside, and obviously you've got potential for a double bottom bounce as well, possibly. But I would say that one, nice extension. We're probably looking at this being the profit take move. However, it doesn't seem to have any legs, does it? Again, as I say, we keep getting this negative news every now and again. We get this flurry of positive news coming for the US dollar, and the US dollar kind of stops doing what it's doing and it rallies ever so slightly for a bit. But the first tiny inkling of negative news for the US dollar, and it drives it down really, really fast. And this is what we're seeing with the US dollar at the moment, because the market's sketchy about it. It just doesn't want to drive too much money into it because it knows we're approaching terminal rate. So when we get to terminal rate, there's nowhere for the US dollar to go but either sideways if everybody else starts to reduce rates at the same time, or down if everybody continues to up their rates and the US dollar is forced to down their rates. Then there's only one place the US dollar is going, and it's down. So the market's not willing to take a risk at the moment on negative news. When we get negative PMIs like we had yesterday, look at the rally we got. It's just weak, very weak. So we need some really good positive news coming, not negative news, and we'll get some strength in this one. But the Canadian dollar will power up as well on oil pricing. Oil is the main export from Canada. Oil prices are going up. Canada gets richer, currency is more attractive, more investment comes into the industry, currency rises. Yeah, it's all to do with fundamentals. So at the moment, it's bias a little bit of a buy on US dollar CAD, and we've got retail at the moment going the other way. Yeah, so retail at the moment are buying it, therefore the market wants to drive south to go and get that liquidity when it needs it, which is why we're finding it very difficult to get more movement to the upside. So there's lots of things holding it back at the moment, but I like it as a long still. That's an ADR today. It's not far away. If we get negative CAD news and positive US at 130, we could easily get a 150 ADR. That's all I'm going to need to get out of it. So like that is long, already in it. New Zealand dollar, US dollar. Again, sideways, nothing is extended on the RSIs. As you can see, this thing's just like that. Yeah. Nothing's moving. It's all sideways. It's all range bound. So you can get in any extension you like. There was a 4-hour RSI extension up there. You could have taken an M5 reversal alert. Although these New Zealand dollars were impossible to get into really yesterday because it was New Zealand dollar news. And again, positive news, no real positive reaction. Yeah, everything is getting towards terminal. This was a better than expected news event. Yeah, on a better than expected news event, we tend to see a fundamental shift and a huge drive. All we got for the New Zealand dollar yesterday was a pop and then a complete undoing of the move. And now we're down slightly on the day. Yeah, so the market's just now thinking, where the hell do we go from here? Which is why we've got so much low volatility in the market. We're not used to this interest rate rising. Yeah, we're not used to seeing these pumps on interest rates happening. We've been sitting for 3 years during COVID and recovering from COVID with interest rates flat, zeros, negatives. This is completely unusual to the market now. We're so accustomed to not having this interest rate drive. Other things driving the market, everything else driving the market but interest rates. We've flipped to nothing but interest rates. Now the market's got to focus itself back on other fundamentals, and it's struggling at the minute. Nobody's really got any clue as to what means what, which is why we're just finding a lot of balance everywhere. So at the moment, there's nothing extended on this one. That was your entry yesterday, but it wasn't. You couldn't really get into it. You couldn't take a reversal anyway. You could have taken an ADR extension on it, but you'd had to get in some other form. So sideways. New Zealand dollar, US dollar. Again, look at the bias scorecard with these. Just you want confirmation. If you see a beautiful opportunity come up on Euro New Zealand and it's the best short in the world, do you really want to take it? Probably not. Yeah. So there's a couple of pairs which have got a really strong fundamental bias in one shape or the other, but the rest of it is, as I say, is all range bound at the minute. So New Zealand dollar, yen. again, nice extension there. You can see I got into that one and out. Waiting for the next opportunity at the minute. Probably down in this propulsion gap, ADR. That would be a nice little potential long, but sideways. Just in, out, in, out. Nothing's really squeezing hard. Everything's going to give you an opportunity to get out in a minute. So, but there's no opportunities, no H4 extensions, no hourly extensions at the moment. More downside target than upside. So I would expect us probably more to come down to here. Although on the New Zealand dollar double rate pump, you'd expect it to go through the roof, wouldn't you? Not getting it. It's just, the fundamentals at the minute. You can't really pay attention to much news and direction on news. Yesterday, we had a push on the US dollar on negative news again. So, yeah, just follow the money at the moment. That's more than likely where we're going to be headed. After that, we're probably going to come back up and sort that propulsion gap out. If we come back up this morning and sort that propulsion gap out, then we're probably going to come back down to there. So if you're not using RSI as I am to get your market condition, you could use propulsion gaps, but just be aware if you get into a propulsion gap short there, when the RSI is there is every opportunity this thing could drive up to there, which means you're going to go up to there. But all you do then is you short it again and wait for that pull back down because you're getting in on an RSI extension. You'll just be in one move earlier than I will or other people trading that way are. So, but no extensions on that one either way at the moment either. New Zealand dollar Swiss, same thing. So it looks like we've got a powerful Swiss franc this morning. Yeah, so strong Swiss franc across the board at the minute. So New Zealand dollar Swiss coming down at the moment. Again, you can see how orderly this thing's been. Since 21st of March, we haven't gone anywhere. Yeah, just completely sitting sideways on this now. And prior to that, yeah, all we're doing is like balance, little bit of a push, balance, little bit of a push. Yeah, up, down, up, down. Everything's just so orderly at the moment. You had a little bit of a squeeze there. The profit take was there. But, sideways, bang in the middle, no opportunities. Hourly, yeah, just sideways at the minute. So I would look at buying the lows. So you've got two lows coming up. If we get an extension to ADR, you'll also have an RSI extension. That'll be a nice little long back up into there. If that fails, take a second entry down at 175 ADR and up. And again, up there, you've got two orphan propulsion gaps up there. Again, look at how long these can take to come back and fill. Yeah, so that's 1, 2, 3, 4, 5, 6, 7, 8, 9 days. Yeah. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days. So that's 175 ADR. Looking at the speed of this is moving at the moment, it's probably going to take maybe 4, 5, 6 days maybe to get up there. It might want to come down here and do this all next week and then take 2 weeks to get back up there. Don't know. But all you can do is have a plan. Yeah. And if that plan works, brilliant. If that plan doesn't work, wait. And at some point, you're just going to get that market structure movement and that market structure shift, and you'll be able to exit. New Zealand dollar CAD, same thing, sideways, really sideways. Everything's just really sideways. So push it out of here. We've got targets to the downside to finish. We've got targets to the upside to finish. We've got this whacking gate propulsion gap at this upside that we haven't filled yet, which is here, which is that fundamental move that we had. So we have traded into it. The market structure on this is just beautiful. Look, it's just up. It doesn't matter. You get in any direction on this at all since February. Doesn't matter. You hit the buy button, sell button. You hit it completely at random. Doesn't matter. You're out. You're out with an exit. There's no way you're not getting out with profit over the last 3 weeks or 4 weeks on this. So same thing. Right now, there's no extension. Propulsion gap to the target to the downside. We've got one to the downside there. We've got the big one to the upside there. Where we are at the moment, one of those two things is going to happen. No idea which. Pick one. If you want to get into it, pick one. Take 15-minute reversal at random. The next one you get, which will be a long, because you just had a short, and go for the upside. Yeah, we've got small upside target within ADR. We got, well, you're pretty much at this one, aren't you? Got target down there, which is just beyond ADR. So again, good targets up and down on New Zealand dollar CAD. Pound US dollar we've already looked at. 4 hour, we're up at these highs at the minute. So we've just broken out of these highs. This is at the moment in a push. So we've got an uncharacteristically strong pound at the minute. And we've got a slightly uncharacteristically weak US dollar. So this has obviously driven the pound US dollar up at the moment. It's been very, very orderly on its move. Yeah, so it hasn't left many propulsion gaps in place, apart from this batch that we've had over the last week. We've got this little one down here as well. So quite a big one actually down there. So if you look at it on the hourly, again, much more target-rich environment to the downside than the upside. We've got these little ones back here. That's kind of done, that one. So back down here, 200 ADR to the downside, but we are going to need, again, strength on that US dollar. We're not getting that strength in the US dollar at the moment that we're used to. So we've had the reversal alert, we've had the retest, and I would look for shorts on this one at the minute, but it's not extended. So there's no real opportunities for me to get into it. You can see I got into it here and out. Yeah, on that RSI extension, got in there on that RSI extension and out. So taking the RSI extensions, but right now it's flatlined. I'm out from a trade yesterday and just waiting for the next setup. So nothing to trade on that at the moment. Pound New Zealand, pound CAD we'll get to in a second. What's your view on strategy quant X? Also, do you rerun your trading strategies to make improvements? Yeah, strategy quant X is brilliant. I've used it a lot, but only for long-term strategy. For developing sort of 4 hour daily strategies, it's no good for low time frames. Too much random. I don't rerun my trading strategies to make improvements. No, that's called over optimization or curve fitting. Not good. Got pop-up alert on ORB DAX demo. Germany 40 profit is at your target is 5. What is the target 5 referring to? Mimo, that's your trade manager dashboard. Yeah. So if you've got that pop-up that says your target is at 5, if you go into your trade manager dashboard, that's this alert here, individual trade profit target. So you can just turn that off. Sound alert, turn it off. Or adjust it to what you want it to be. Adjust your targets to what you want them to be. Pound New Zealand. I haven't got my terminal over there. Hang on. Let me just check. I've stopped out break even on that pullback. Break even stopped. This is what happens when you use break even stops. You get stopped out break even. That's what I asked it to do. That's what it did. Pound New Zealand. So at the moment, obviously, that's the obvious spot to aim for. Stuck at the minute. Really, 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 really range bound. Yeah. And again, you know, what we were talking about earlier with drawdown control and stuff. This position here, when I started doing this aggressive drawdown control, is that one there. It was only in about 2% of drawdown, roughly. So, you know, 2 weeks or so, 2% wasn't the end of the world. I just wanted out because it was not going anywhere. And it's so lethargic, so slow. It's tying up liquidity in something that's just not moving. But if you hadn't have taken that position or that position and you'd have started the EA there, you never got anywhere near needing to do drawdown control. And this is, again, something else I was saying to someone in Telegram group about the market reverse alerts EA. because they were saying, I'm just going to watch you and follow you and what you do on the live streams. And I'm like, well, that's no use, is it? Because you're not going to be in the same trades as I'm in. Because your portfolio will never start at the time that my portfolio starts. You will be in different trades to me. So you can't follow someone and do what someone else does, because you won't be in the same entries. You won't get the same exits as other people either. So you've got to be able to manage this yourself. And same with prop, isn't it? Yeah, if you started your prop evaluation with that trade, happy days. If you started your prop evaluation with that trade, you probably blew the account. Yeah, the day, the week, the month you start, and the entry you start with is determining what you're going to make in the market, not any instrument or EA or anything specific, is it? It's all down to what you're in, when you're in it, and how you deal with what you've got. Doesn't really make sense, but you know what I mean. Pound New Zealand. So this high's holding. We put a new low in. Yeah. We're putting in a new high. I reckon they're going to come back down and do that. We have got lower targets as well to the downside. Again, really old. This is going back to February now. We haven't come back to this. So we've had that strength in the pound. We've had a little bit of a weak New Zealand along the way, and it's just managed to be kind of the perfect storm. So, targeting that. And this is why I don't hold my my trades. So if I got into a short here, for example, and I was targeting this propulsion gap, I would be out here, because you will find these don't get hit. And if you hold that target forever, all you're ever going to do is you're just going to keep scaling in and getting further and further and further away from where you think price is going to go. Get out when you've got a profit. Don't get out because the market has to go to somewhere. The market hasn't got to go anywhere. The market goes where it wants to. We use these as targets because we know that 90% of the time the market is going to use those as a endpoint. However, sometimes the market is not going to use these, that one's done, as an endpoint. Yeah. So that's my target. Brilliant. If it moves down and gets to it, fantastic. If it moves up and makes another propulsion gap and then moves down into that propulsion gap, that's my new target. This one, I can still go for it if I want to, but if I'm in $500 of profit on that new propulsion gap, that's where I get out. Thanks for the follow. I can't say your name. Fuli, I'm going to call you. Fuli, because I can't say your first name. Guyan. Guyan? I struggle with letters that are quiet. So pound New Zealand, not anywhere at the moment. Prefer it to the downside. We're just filling this propulsion gap at the moment. Gap fill got done. It wasn't really a gap fill, it's just New Zealand dollar news. It happened very, very, very fast. Literally 1 minute. Boom. We were down there within a minute. Very, 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 very quick move on the news, that was. It was totally unexpected, obviously. Thanks for the follow. But it all undid. So thanks for the follow, Adric. Welcome aboard. Adric, Adrian. Downside on that one. All the pounds, if you look at the buy scorecard, all the pounds basically are kind of rangy. They were all negatives. We've got more positives creeping in there now. The COT bias on the pound has shifted. So a lot of these pounds now, as you can see, are neutrals. Whereas we had negatives. They were all -4s on the pound pairs, which was giving them all a negative bias. That's shifted now. The market's shifted out of that. So we're pretty neutral on these. Again, take them in any direction you like at the minute. Just wait for a setup. Ever so slight possibility of a setup there. But pound yen, same thing. So we had this nice area of resistance, which we basically butted straight through. And then since then, we've just literally head and shouldered, and we're pushing back down. All the targets into the downside here, down there, and down here. We've also got targets to the upside up here. Yeah. So where we are right now, it's going to go one way or the other. Currently, I'm short based on the hourly RSI extension there. No, sorry, there. That was when I got in. got out. What? Oh yeah, this was something happened. Something glitched. I don't know what it was on this trade. So I got in, did drawdown control, took a second. The second exited. For some reason, the first trade didn't exit, and I don't actually know what happened there. That was some weird glitch I've never seen before. It's possible that I lost connection to the broker or something, and then obviously when the EA came back online, it checked, and it was like, well, that hasn't hit target. I don't know, but that was a weird one. So I'm still in short on it, which I don't mind really, because I think we're still coming down. We've got some decent yen strength coming through. So what I will probably do, and what I'm going to do actually, is I'm going to set a manual target on this just at that low, because I should be out of this trade already. I shouldn't actually be in it. So I'm just going to set a target at that low to get out. But yeah, so there's no real opportunities on this one either. We're bang in the middle. Could go either way. So if you go short and it pushes up, get in, get out. If you go long and you go for that target and it pushes down, get in, get out. Usual stuff. Pound CAD, totally sideways. Again, bit of a difficult one, this one. Pound Swiss, sorry, not pound CAD. Swiss franc has had obviously issues banking wise. Since then, we are completely sideways in a balance on this. So we've got a range high and a range low formed down here. Right now, we're heading down towards the range lows, probably down into this propulsion gap or maybe this one. This one's been tested. This one's also been tested. This one is done. So the target really, I think, is all the way down here. However, we've got this big propulsion move on this A-shaped recovery here as well to target to the upside. So this could go either way. Need to make its mind up. When it does, obviously I'll react, or the EA will get me in however the EA needs to get me in. So right now where we are, if we push down into there, I will go long again and get out of the position. If it pushes up, I'll be out obviously as it goes up. But again, your entry on this one was yesterday, and that was a nice double bottom bounce, pushing down a little bit this morning, but looking for a push up. If it continues to come down, we've got a strong Swiss franc at the moment, which is great. There'll be a second entry taken down there, and we'll get out on the profit take move of that one, which will again take RSI extended, and then we'll need to push back out. So, but at the moment, I'm long pound CAD. Got a sell on at the moment. RSI extension on that one yesterday, previous day, sorry. Yesterday we didn't go anywhere, pushing up ever so slightly this morning. There's your high. So get up there, take a second position short. Massive propulsion gap target there. We've got this big one here, which is triple tested. So again, you know, with these, there's lots of little propulsion gaps on the way that haven't been touched yet. So highly likely we're coming down. This one, after testing it 3 times, I think there's a good possibility we're not going to come back down to this one, but we'll see. It's a long way away. You know, we're talking days to get down to this sort of level. Canadian dollar should start to power up now. We've got some oil strength coming through. If we get decent unemployment figures for the Canadians this afternoon as well, that's going to give that another bolster. So this afternoon, I think you'll see one way or the other, this CAD will either go that way or that way. But it's more likely we're going to see strength coming through on that CAD now. So the pound CAD at the moment is a +2, still range bound. There is absolutely no cop bias. There is absolutely no retail bias whatsoever. So on pure fundamentals at the moment, the pound is ever so slightly stronger than the CAD, marginal. And there's no real bias in any direction. So again, take it in either way. As you can see, yeah, it's just moving very nicely at the minute. We're waiting for some directional bias on this one. It's either going to take off to the upside or it's going to take off to the downside. Don't know. Right now, short bias. High, low, lower high, looking for that lower low, looking for market structure to continue to the downside. Just waiting. Pound odd. Again, hugely target-rich environment to the downside on this one. Huge propulsion gap there, which is going to get filled at some point. We've just tapped into and tested that high. There's that propulsion gap test. Looking for this. So So this is a really good example of why I get in and get out fast. That's the target, yeah? Huge propulsion gap. It's very rare you get a propulsion gap of that size that doesn't get retested and completed usually. So RSI extension, in, target, out, pushed up. Another RSI extension, in, out. We're still there, yeah? So just because it hasn't hit that, yeah, doesn't mean I'm going to hold this position and be in this and stay in this because it's coming down here. I bank profit fast. I want the money in my P&L, green, realized, spendable, withdraw it, go and buy a meal with it. Yeah. You can't buy anything with unrealized drawdown or unrealized profit. So this gave me 2 trades. And if we get another extension to the upside and we come and retest that higher ADR, I'll get in again and I'll get out again, take 3. And then you could possibly take 4. So that one target there, you can keep playing that over and over and over again because the market is going to be drawn to that like a magnet. We know it is. It always does. Yeah. So, and we've got all this other targeting to the downside. So we're in this lovely big run, which is starting to slow. And we've got a bit of volatility starting to come in now and potential strength on the pound, which is great. We know we've had a good strong pound. But the Australian dollar could obviously power up at any point and just drive it down to there. Yeah, during an Asian session when we're all asleep in the UK. That's all you need, 1 ADR. So this is 175 ADR, which can be done in 2 days. And then we've done that. Then from there, we'll go where we're going to go. But it doesn't matter. If you're targeting small movements, and again, you know, this is why I say keep your targets, if you can, within an average daily range. If the ADR of the pair is 156, like it is in this case, if you have your target always less than 156 pips away from where you're getting in, the chances of it hitting that target are 58% because it moves up and down within its average daily range 58% of the time. So if your target is always within an ADR, you're very, very, very likely to hit it very fast. Yes, you're going to miss. I got in there and I missed all of that. I got out there and I missed that lot. So what? I made a profit. I put it in the bank. I can draw it out and I can spend it. Yeah. Same with this. If you hadn't have taken the exit there, I'd have been in drawdown. Taking a second entry there, I'm still in drawdown. Right now, I can draw that $500 or $300 out, or $600 because it's 2 trades. So I can draw that $600 out and spend it. Yeah. And I'll get in again. If it goes up to there, I'll get a 125 ADR and I'll take it short again and I'll keep doing it. Yeah. That's the beauty of position trading and small targets. We're not looking to make £1 million. We're looking to make consistent money, banking it, constantly banking that money all the time. So pound odd, again, it's in a massive uptrend at the minute. So, which is why, again, no opportunities. You had one opportunity. There you go. There's one trade there. Long. Everything else has been a short. But the trend has been very, very narrow, very weak. Yeah, so we're just taking small pullbacks. Yeah, out on those little pullbacks. Yeah, and all the trend traders who took that trade there, they're all sitting in it now going, yeah, brilliant, I'm in. And at some point they'll get out. Well done. So you've been sitting in it for 2 months in one trade. In that period of time, I've taken 1, 2, 3, 4, 5, 6 trades, 6 profits. Again, if you want to know about the difference between mean reversion and trend trading, there's a video on the website on YouTube about it. Why you should be a mean reversion trader and not a trend trader. That one there. Yeah. 20 to 30% of the time we're trending. 80% of the time we're mean reverting. How many opportunities are there in a trend-based strategy? 2 out of 10. How many opportunities in a mean reversion strategy? 8 out of 10. So if you want opportunities to get into the market and get out of the market, mean reversion is going to give you way more opportunities to trade than any kind of trend strategy. Thanks for the market. Thanks for the market. Thanks for the follow, Saeed Mohammed. Welcome aboard. So yeah, no opportunities there really. Euro US dollar, sideways at the minute. Targets to the downside and targets to the upside. Bang in the middle of nowhere. Don't know. It's going up or it's going down. So your opportunities here, if you want to take any kind of trade today, I would drop down M5, wait for a reverse alert, which you've just had short. You also had one long. Why? Because we're sideways. We're in a range. We're not going anywhere. So it doesn't matter which way you're getting on this one today, whichever reverse alert you took, if you're taking any. If you're targeting up, go there, or potentially ADR, high of the day. If you're targeting short, you've got targets there and there. Again, ADR, low. If you're going long, scale in again, second position there and wait for the bounce. If you're going short and it pushes up, scale in there, wait for the bounce. But again, sideways at the minute, 4 hour. It's a long, but it's not really. Not going anywhere. Yeah, because the euro is strong, the US is strong from a fundamental perspective, which gives you a range. Yeah, no fundamental bias. COT positioning is long, which cancels each other out. Retail, no directional bias. The fundamentals for the euro are worse than the US dollar at the moment. And obviously that can change this afternoon and tomorrow. But at the moment, you can go either way. Euro New Zealand. So this one basically big target to the downside, another big target to the downside. That did get tested. You got a little one there as well. So there's way more targets to the downside. The euro at the moment, though, Lagarde has been very quiet recently. We've had very little noise coming out of the eurozone. When's Lagarde next speaking? Not for a while. There's nothing scheduled for the euro for ages. So the 21st of April, PMIs is the next euro news. So we've got nothing for the euro coming up for a long time. So at the moment, obviously, doesn't matter where you go. We've got a range high and a low. We've just poked our head out of there. That was basically off the New Zealand dollar rates, which we pushed back up, pulled back down, pushed back up. So we're bang in the middle again. No directional bias. Big target to the downside, no targets to the upside. So I'd have to say it looks a little bit more short than long. We've had a very nice big interest rate rise on the New Zealand dollar, which should be massively bullish New Zealand dollar. However, since we had that rate rise, we've done nothing but go the opposite direction. Again, there's just nothing, no clues at all. So any kind of strong move in any direction you get, those are your opportunities. Just keep mean reverting until we get some kind of directional bias, which we haven't got at the moment. Euro yen, again, sideways in the middle. You've got a couple of propulsion gap targets to the upside on the hourly and one up there as well, and then targets to the downside as well. So it's going both directions. At the moment, market structure is short, so there's a good chance of a pullback. Yeah, and then another leg down. But we could just go all the way down to here. If we do, that's where your long is. Trade it back up into there. Again, range bound. Euro pound. This is bouncing off the lows at the moment. So there was the long opportunity. This is your range low, which we keep testing and we're pushing down into. So this pound is really strong again at the moment. Range highs up here. You've got a secondary range high here. Yeah. So at the moment, I'm looking this area for buys, and then up there you could be getting in shorts. But you know, range bound. Everything's range bound. So take it in any direction you like. Just wait for the opportunities. Just be patient. Yeah. Get in. Get in. At the moment, don't do anything. Whippy. That's the only target. You got 225 ADR to the upside. There's nothing to the downside. So you'd have to say probably a long at the minute, but that was your opportunity long, which I took, and I'm out. Just waiting. Nothing there. Euro Swiss. Same thing, completely sideways. At the moment, I've got a buy on. This one, we've got levels on this. We've got that one there. We've got this level there as well. So this area here as a zone, this area here as a zone as well, and obviously those highs. So if you were to draw support and resistance zones on this one, you'd be looking at sort of somewhere around about there, and then somewhere around about there. Yeah, so somewhere in here, we're either going to find support, which is potentially playing out now, and then we're going to push back up on this leg down. Yeah, or we're just going to slam through this back down into there, and then by the time we're doing that, we'll be massively extended, needing a profit take move back to the upside. So my entry's there on that extension. If this doesn't work, we don't push up, I'll be taking a second entry down there and getting out on the 2 when we push back up again. Euro CAD, sideways, everything sideways. You know, this is why the RSI dashboard is there, yeah, because I don't have to do this. What I'm doing is doing it for obviously just to show you what I'm looking for. But I'm waiting for this, because if this thing doesn't have anything lit up, I'm not in. Yeah. But when we do get in, I would expect us to be at highs, at propulsion gaps, or at an area of logical for a logical entry that makes sense to get in at an extension, obviously. So, but you know, right now there's nothing on EuroCAD. Target to the upside, so good potential long. Target to the downside, so good potential short. One or the other, pick one if you want to get in. But if you know, again, not much point really in getting in here. Wait for the market to move. If you get in here, you literally have a 50-50 chance. If you get in down here at ADR 125 and support and RSI extension, you have the fact that we know that RSI extensions tend to bounce. We have the fact that we know support tends to bounce. We have the fact that we know that ADR reversals tend to bounce. Yeah, so you've got 3 reasons to get in there. There's absolutely no reason to get in there. Wait. Yeah, sit on your hands, be patient, wait for something to happen. Euro odd, extensions to the upside. We've got targets up there. We've got targets, loads of targets to the downside. So the Australian dollar is a bit of a tricky one at the moment. From a fundamental perspective, it is, again, really mixed. If you look at the COT bias on the Australian dollar pairs at the moment, most of them are neutrals. Most of the COT biases are neutrals at the moment. The market's just really not got a directional bias, as I say. So really, it's being driven by retail sentiment. The only real good short at the moment is the Aussie US. That's the only thing that's got any kind of strength. And that's the only thing that is going to get any kind of strength. The Aussie dollar CAD is a +2. And if we get retail +2, that becomes a +4, which makes that a buy. So the only things you're possibly ever going to get any kind of real strength or weakness on is your Aussie CAD and your Aussie US. And those are in opposite directions. Yeah, typically the US dollar and the Canadian dollar move together. So it's highly unlikely that either of those edges would ever play out anyway. So the only thing I'd be worried about potentially buying will be the Aussie dollar, US dollar. I'd much rather be selling that one. But at the moment, you can kind of take it in any direction, really, because it's not strong enough of a bias to really say that you're going to get squeezed on it. However, that could obviously change. So, so all these Aussies, yeah, either direction. Right now, there's no opportunity. The opportunity was yesterday on that RSI extension. Again, there's your entry, there's your exit. The EA just got in, got out, done. So waiting for the next opportunity to present itself. Swiss yen, very sideways on the Swiss yen. Got out of a short on that this morning. Did I? Oh, yeah. Swiss yen, so I got out of a short on that this morning. So this one, this is the safe haven run. Can't see it, can you? So my big head's in the way. This is the safe haven run. Yeah. So we started driving into the yen. We've been undoing it ever since. I think there's a good chance we'll get back up there. We've got a fairly strong Swiss franc at the moment. So once we get back up there, back up to where we were, we're then basically just reset, aren't we? So, however, obviously you can see that the market structure on this on the way is very nice. So you can kind of take it in any direction. There is no advantage long or short with the yen. I would always be if you're going to err on the side of caution with the yen, I would always be looking to short everything against the yen, because the Japanese intervene and they inject into their currency when they want it to strengthen up. So there's always a much higher chance of a big drop happening on the yen pairs. So if you look at the US dollar yen, for example, we're on the Swiss yen, remind me. If you look at the US dollar yen on the 4 hour, you can see very clearly when the Japanese intervene. Yeah, so that was our first intervention. That was our second intervention. Yeah, that was another intervention. Yeah. So when the Japanese are not liking, usually what happens is in financial juice, you see them say something along the lines of, we are monitoring FX movements very carefully. That's a signal to say, if you don't stop devaluing the yen, we will pump it. Yeah. So when you see Kuroda or Ueda saying in here that, you know, it's always in the Asian session, you get something coming out from Japan. There's nothing overnight in Japan, but you see them saying, you know, we're carefully monitoring FX movements, you know, along the lines of unfavorable FX movements may require attention. In code, if you don't stop, we're going to pump it. So when they pump it, you always want to be on the right side of it, because a pump can start a shift in direction completely. So, and obviously don't forget, anything goes wrong in the world of any shape or form, natural disasters, wars, banking crisis, financial crisis, healthcare crisis, you name it, everything flies straight into the Japanese yen. Yeah. So it's the safe haven of the world, and often into the Swiss franc and the US dollar as well. But the yen is always one of the ones that gets the major amount of money coming in, because what the world is doing is generally drawing money out of the stock markets, looking for somewhere to put it, and they want to put it somewhere fairly safe, and it's usually the yen. However, with what's going on with China at the moment, the yen may not become a safe haven anymore. It's featuring, isn't it, on the edge? So again, world conditions change, we have to change with them. You just got to be aware of all these things. But everything that's going on at the moment, I'll be looking more for shorts than longs. However, right now, I think we've got every opportunity to push back up as well. So, sorry, that's US dollar yen. Swiss yen we're looking at, isn't it? At the moment on the Swiss yen, we're looking to push up into those highs as an interim target. However, we've got targets down there. So is it going to do that and then that? Or is it going to do that and then that? I don't know. But at the moment, there's no reason for me to get into anything. So I'm just sitting where I am on my hands. CAD yen, same thing, sideways. I've got a hedge on this at the moment. So this is part of the problem with position trading when you've got light liquidity, so light volatility in the market. What you find is the market moves up and down a lot, but it can often move up and down within the constraints of your target. And that's exactly what's happened in this case. So I had a sell here on the hourly. It pushed down, it didn't get me out of the trade, and it pushed up against me. So I scaled out of a portion of the position and took a second sell. Yeah. What's happened is we've pushed up again. It didn't go up far enough for me to get a third position on, and then it dropped. RSI got extended to the downside and then pushed up and gave me a reverse alert. So I took a long. Yeah, so it's hedged. I didn't do it. The EA did, obviously. So at the moment we're hedged. So the way that this is going to be managed is the exit short is here. Yeah. So if it pushes down into there, that one, I'll be out of the shorts. And then what will happen is, because I'm in long, I'll take an opportunity to go long, and then I'll get out when we push up on the longs. Yeah. So the EA obviously will handle all of this for me. And I can't lose because one of these trades is going to win. If it pushes really hard now, that buy, you can't see it, but the buy here, this orange one, will get out a profit. The sell, I'll still be in. And if we push out the highs there, I'll take a third short, waiting for it to come back down and sort all these out. So it doesn't matter where it goes. And again, this is part of the, what I'm saying at the moment with the conditions that we're in the market at the moment. Everything is just ebbing and flowing. It's like calm waters. We're sitting like this. At some point, it's going to get rocky. And that rocky point is going to come when all of a sudden we hit these terminal rates on the interest rates, and suddenly one currency becomes less favorable than the others, and then everything starts to squeeze on that currency. If you get multiple currencies doing it at the same time, you just get a load of choppiness. And that is exactly when the buyer scorecard comes into its own. Because then we go, right, we do not want to be doing anything but, let's say, for example, we're plus 11 on the Swiss yen. We don't want to do anything but buy that. Yeah. So you would switch the EA to long only mode, and it will get into less opportunities. Less opportunities equals less profit. Then we will come back down to the usual 5 to 10 to 15% a month. Yeah. At the moment, it doesn't matter, does it? You do whatever the hell. So yeah, sideways on CAD yen. CAD Swiss, again, very, very sideways for the last few weeks. That's the squeeze. So that's a good example of a squeeze. So that's 1, 2, 3, 4, 5, 6, 7-day squeeze. Direction, not one little profit take move. We had a little bit of a flag there, but yeah. So when you talk about, profit take moves are pullbacks. Yeah. We got a big push down and we flagged. And then we pushed down and we didn't stop. There was absolutely no pullback whatsoever until we got down to there. And then we pulled back on the move, exited. Thank you very much. If you are in the CAD Swiss long, you are also in the Aussie dollar Swiss long, Euro Swiss long, US dollar Swiss long, the pound Swiss long. You have got 5 times the exposure on that move. Yeah, which is why we pay attention to exposure. So that will take you into stupid drawdown. Again, what we were talking about earlier. That's why we monitor exposure, and you don't run the same strategy on the same account or multiple strategies on the same account. Yeah. So if you took a CAD Swiss long there, for example, and that was also an ADR hit, you would take an ADR hit long, you'll take an H1M5 long. If it was a 4-hour RSI extension as well, you'd have taken a 4-hour long. You'd also taken an H1 hedge mean reversion. Yeah. 4 strategies. 1 squeeze, 4x the problems. You're trading 5 strategies on 5 instruments on 4 strategies. It's 20 times the exposure on the Swiss franc. Again, this is what I'm saying. Video 4, utterly crucial and critical to position trading. And this is the one that people seem to, for some reason, be skipping. The only video I would ever say you've got to watch is that one. If you're going to watch one video, that one, because that one goes, this is the problem. This is how you fix the problems. Yeah, we're not flicking from a stop loss strategy into a this never loses strategy. We're flipping from a stop loss strategy, the problem of being cut every minute by stop losses and your account balance going down and down and down and down. We're eliminating that. We're eliminating the psychology that goes with it. We're replacing it with a never-ending drawdown. Yeah, you need to know how to handle that. Yeah, so there's a really good example of what happens when it goes on. Yes, I got out of it after a week. Well, 2 weeks basically, that trade. I've been in squeezes, and people that have been in here for a while will attest to this. I've been in squeezes for 2 to 3 months. And this is what I said to somebody in Telegram. How long does a squeeze last? How many do you get a year? Probably once every few months you'll get a small squeeze. Every 3 to 6 months you'll get a big squeeze. How long do they last? Till they stop squeezing. Yeah. If New Zealand had a massive earthquake and it got split, it was obviously split in the middle already, but if the North and the South Islands got split in the middle again, yeah, they had no power and no banking system, do you think the New Zealand dollar will go up or will go down? And if they never recover and can't glue their country back together again, what do you think is going to happen to the New Zealand dollar? When are you going to get out of that squeeze? Never. We don't know. World War III starts. What do you think is going to happen to the FX markets? Do you think those squeezes will ever finish? Nope. Got to be able to deal with them. Got to be able to identify them. Very, very, very important. And you're not going to know what to do. Neither am I. I'm not going to have a clue what to do. You just got to do what you want to do with it when you want to do it yourself, based on what you think is going on in your account. If I made 100 grand, for example, in a year, and I had a £100,000 account, and a huge black swan event happened because a nuclear missile was launched by Russia towards the US, and the US dollar collapsed and it blew that £100,000 account, what have I lost? Nothing. I basically made 100 grand and I've lost 100 grand. Yep. So if you blow an account, as long as you've made more money, and it's exactly the same as prop firms, isn't it? In a prop firm, if you take 10 evaluations and blow 7 of them, those 3, if you get those across the line and make more money back than you spent on all 10 of those evaluations, you've made money. Position trading on multiple accounts is the same process, yeah? Except you shouldn't blow an account if you're spacing properly and you're doing drawdown control and aggressive drawdown control as taught in the bootcamp, which is why I say, do not skip day 4. Critical. CAD Swiss. So buy on that at the moment, which is an RSI extension from previous 2 days. I'm in there. Huge propulsion gap target to the upside to come back to at some point. We may well come back down and sort this and find some support somewhere down here, which it looks like we're finding a little bit at yesterday's low. So yeah, so this support resistance, very, very strong. That's kind of where we are at the moment. We have slightly broken through it. So then I'd be looking for that area there as our secondary backup. If that fails, then we're coming down somewhere into this area. So either this is going to push up, done in a day, or it's going to push down and we're going to retest this one and come somewhere between 100 to 150 ADR, possibly 175 ADR. Yeah, so somewhere into this zone. Second entry, exit. And then we've still obviously got that target to come up to at some point anyway, haven't we? So, but longs only really on CAD Swiss at the minute. Hopefully that will get sorted this afternoon. Canadian dollar, positive figures, we could well be up there. That's an ADR. So if we get up there, I'm out anyway. Aussie dollar, US dollar. So we've got, I've got buy on this one at the moment. This is an H1 M5 reversal from yesterday. Target still to the downside to finish. This is done. We've got a target to the upside there, which is an older one. Yeah. So we didn't quite tap it, that target. Again, we got an orphaned one up there, which is from the 15th of February. So that's 6 weeks old. So that is, no, sorry, that one's done, isn't it? So that's the most likely target right now. But, you know, just some kind of up and down, get in and out, you know, nothing's moving. So as I say, I feel like it's a broken record, but it is the case at the minute. All we're doing is we're ranging on everything. So Any RSI extension you find, you've got an opportunity to get into. Aussie New Zealand, just got out of that one this morning. As I said, I took this off manually. It was very close to exit, and we've got this big propulsion gap. The only reason I'm cautious on Aussie New Zealand is, first of all, because it's bitten me in the backside already. That's where I got bitten in the backside. What I do not want to be is bitten in the backside again. I think this is a short. But obviously you can see how nice the market movement is and the structure is on it. It's giving you lots of exits all the time. I'd just rather be cautious. This is our very, 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 very strong support level here. We bounced into that 4 times, slammed through it. What I'm worried about is that, and then us getting really extended and starting to accelerate down on the next leg. And the next leg is going to come down into that low down here. Already got a line on it there. So what I didn't want to do was be stuck in it all the way down to there, which could be potentially 2 or 3 weeks. May not do it, may not push, may push back up back into the 24.72 area and then continue down from there. Yeah, don't know. But obviously you've got a double bottom opportunity if it comes down there to get into potentially another long or down. But right now I'm out on the long, so neutral on it in a minute. There is upside targets. Again, these are all orphaned, and the Aussie dollar, New Zealand dollar is a sell. There's no cop bias on it at the moment. Again, that will change tomorrow, or Saturday rather. I keep thinking it's Friday today because I'm not here tomorrow. But yeah, it's ever such a slight sell at the moment, but fundamentals on it obviously are mixed, which is why we're kind of moving down gradually. But it is more of a sell, yeah, than a buy. So out that one, but not really any opportunities to get in at the moment. Aussie dollar yen, already covered this. I've got a buy on Aussie dollar yen at the moment. Have we covered this one? No, we didn't. Did someone ask this one earlier? I can't remember. So there's your low. There's your propulsion gap fill on that one. Pushed up, pulling back. There's propulsion gap targets to the upside to come and sort out. 4-hour RSI extension short was up there. On the hourly, you've had a nice extension there. As you can see, I got into a long. I've just done drawdown control on that one yesterday. There was an entry long on that yesterday, which you could have got out of. We've got these propulsion gap targets there. So here is your break of support. Yeah, so we tapped, broke it. That's where we're coming back to, this propulsion gap. So we've also got these targets to the upside there. So this big propulsion gap, which we completed there, there's no big targets to the downside. There is only targets to the upside. So what I kind of see happening at the moment is a push, pull, push, entice everybody to go long. Once we've got up into here, then drop it and take out that liquidity down there. So I'm expecting it to come and push up. If it doesn't push up, I will scale in on the way down to there. Another position. Well, the EA will get me in when we're distanced far enough apart. So I'll take a second, possibly a third, and then push up from there. Aussie dollar Swiss. Again, sideways. A little bit more bullish than bearish on this one. Got big old targets to the upside on this. Yesterday's low, we've got a support coming up down there at ADR. So if we get an ADR hit on this one, that'd be a lovely opportunity for a long. Propulsion gap targets to the upside that are untested as well. So there's way more upside potential on Aussie Swiss. We've got a strong Swiss franc at the moment. So up there or just get in. But there's nothing, I'm not on it at the moment. And Aussie dollar CAD. Again, flat at the moment on it. Got out on that one yesterday. Straight in, straight out, push, pull, job done. There we go. So there's an overview of every FX pair. Right. Now what do we want to know about? Gold. I knew it. I knew it. I knew it was coming. I knew it. Winfred. Gold. Gold. We like gold. Gold. Short. I'm looking for a return to origin on this down here. So there's two scenarios playing out. We've got a double top there, which we haven't tested. We slammed straight through it on Tuesday. Then we pushed up on the news yesterday, took out all that liquidity there, pushed back down again, and now we've made a new low today. So there is a potential that this is your new peak formation high for the moment, but yesterday's high. We've pushed down and made that low, pushed up, higher low, lower low, sorry, lower high, lower low, lower high in this propulsion gap, and continue just to complete this gap fill down to ADR. So that's what I'm on at the moment. I'm short on it at the moment on one of the funded accounts. So yeah, got gold short on that one as well. So CAD Swiss, you're not helping me, are you? So yeah, I'm looking to get some more leverage on today, but there's nothing. There's nothing I can see of any interest whatsoever right now anywhere. Euro Swiss long. I'm already CAD Swiss long over here. Let's a good look at Euro Swiss as a long. That's double exposure me on the Swiss franc, but not a bad entry, that is it? I just don't like the targets. There's tiny, tiny, tiny little ones like that. I'm just not really that interested in. There's no reason to long this. There's a whacking great reason to short it though. I just don't like it as a long. So that's all I've got really is an opportunity to get into anything at the minute. And pound New Zealand is an ADR hit. Again, it's not. Let's go for it. Why the hell not? What's ADR? 72. Half an ADR is 72. Something like that. 0.53. Short. Yeah, let's go for it. So short on pound New Zealand. I'm going to stick a second entry at ADR 125, which is weekly high. So if I need a second entry at 125 ADR, I'll take a second up there and then look for a push down. Target wise, just let it run. There we go. Refinus. I'm running the market reversal alerts EA. I want it to take only 1 or 2 trades. Currently, setting on your set file is to take multiple trades. Please exchange how I change that. Explain how I change that. Sorry, I can't read. So if you want to change the settings for that, yeah, it's in here in the inputs. So in position trading or basket trading, there, So basket trading settings, maximum buy orders and maximum sell orders. So on all of my set files, that's set to 15. Yeah. Because I just want it to continuously scale in for me to the positions. And obviously distancing is scaled apart. So if you just set that to whatever you want your maximum to be, 2 trades, for example, it will only ever take 2 trades. Yeah. If you set it to 1, it will only ever take 1 trade. So up to you what you want to set that to, but that's how you do it. Arderic Adrian, hello from Sweden, watching your lives every morning. Good information, cool. Morning, Ike. Alan, Stevie, I believe Lee was talking about people in general asking questions without watching all the bootcamp. Yeah. No need to get defensive. Just don't fight people. I wasn't having a go at anybody. I was just stating a fact. Just people. The trouble I have, and it's not a problem with people in general or anything really, but the problem I have is I come in here twice a day, and I have been for years, and I did the course years ago. The products have been out there for years. People have been using them for years, but there's a constant new influx of people coming in, and the problem with the live rooms is that people pick up bits and pieces. So people pick up. Like they'll come in, they'll look at the P&L and they'll go, wow, that's amazing. So if I get that EA and put it on the charts and use that set file, it's just going to continuously print money. That's the problem, is people come into the live rooms not understanding what the hell I'm doing, why I'm doing it, what's going on, what the logic is, the mechanics are. They don't understand anything. They come in here and all they see is money. And they think that's basically how we make money. And they'll go and basically watch the bootcamp video. They'll watch the first part of the bootcamp and they'll go, oh, yeah, that's it. I understand what he's doing now. So what indicators do I need to do it? And that's what they do, is they jump straight into the indicators. Yeah. And then they go and discover the EA and they go and put the EA on there and that's it. We make money. And that's what I'm finding. All the comments I'm getting in Telegram, and it's been really busy. In the live rooms, we've had 87 people in here at the moment. We've had 150 people in here at a time in the morning and the afternoon sessions. Yeah. So there's been a lot of new influx of people and they're just not going back to basics. And I understand why. I can solve the problem though. That's why I wanted to kind of say what I said this morning, because over the last week, I've had an awful lot more people saying, this thing is amazing. I'm going to put more money into this. And they're like, no. Everything in trading, you will lose, right? And I've said this to somebody yesterday, 90% of traders lose 90% of their capital within 90 days. So if you deposit $1,000 into an account with a broker, within 90 days, you'll have $100 left. 90% of you. Fact. Yeah. Whether you're using an EA, whether you're manual trading, whether you're using EA, whether you're using gold EAs, whether you're using anything, whether you're copying someone, doesn't matter. 90% of traders lose 90% of the money in 90 days because they don't fully understand what they're doing. And this is the problem. I haven't got a mechanism to control education. I can put out and I can say it until I'm blue. But if somebody's come on to the live stream and watched the first hour of it and I'm missing this part of it, they're missing this message, they're not getting it. They're going to go off and think they found the Holy Grail. And I can't say throughout the whole course, throughout the whole live stream, I suppose I could put it at the bottom, this is not the Holy Grail. Or I don't know. But go and do the boot camp is all I keep saying to everybody every day, except I can't make people listen, So I just wanted to really hammer the point home. Sorry, I didn't want to upset anybody. I'm not saying it to dig at anybody. It's just Stevie brought up exactly what I wanted to say ahead of what I wanted to say. So I reacted to his comment, but it wasn't not aimed at anybody. It's aimed at everybody, me included. Yeah, I'm going to get stung at some point. We all get stung at some point, and that point is where you suddenly realize the market, how good you are at trading, the market will kick you in the arse. Alpari FX, one of the largest brokers in the world, when the Swiss franc peg was removed, they went bankrupt. There is nobody, whether an individual trader or an institution, nobody is bulletproof against this thing. When this thing wants to go, this thing will go. And if you're on it in the wrong direction, you're going to get hurt. Alpari had a segregated account. They still blew it all. It all went. Yeah. And there's nothing you can do about that. Yeah. The first time a nuclear missile goes off, whether it is a short range tactical nuke or an intercontinental ballistic missile, the minute that missile goes off, my account is blown. Fact. I can't control that. Yeah. I can control my risk. I can just the EA will scale me out as fast as it can on that thing, but pretty much I can guarantee my account will go to zero. I accept that because this is my job. In the same way as I accept if I'm a policeman, I'm walking around without a stab vest on at some point in my career, I'm probably going to get stabbed. If I'm a pilot, at some point I'm going to need to make an emergency landing. If I'm a doctor, at some point I'm going to cut someone's artery open by accident. Something's going to go wrong at some point, and I just want to hammer the point home that this is no different to any other job. You're going to have problems in this job, and you need to be aware of how to deal with them. All I'm doing is saying, make sure you've at least watched the video and you've got an understanding of what the problems coming are, because they're coming. Yeah. So that is all I wanted to kind of say on the point. It wasn't aimed at anybody. It wasn't aimed at anything in particular. It's just I am seeing a trend in people thinking that they've suddenly got something that's going to print money, and it's not. And again, like I said this morning in the Telegram group, Brian's been in there for a while, said these set files print money until they stop printing money, then they print loss. So, don't get over eager. If you need a reminder, I'm going to post this in the Telegram group actually, because this is a bloody good reminder. Yeah. You need a good reminder, this PDF on the website, I'm going to post it in here now. So you've got the link. This is your Bible, if you like. This stage 4 is the important one, right? The walking on water, step 4. This is where everybody goes, this thing prints money. I'm going to 2x my risk. The second you do that, the market kicks you in the arse and you're back at step 1, incompetence. But you progress very quickly to this stage because you know what you did wrong. So you are consciously incompetent. Then you go, I get it now. The reason I went wrong was because when I got to there, I did that. So you skip that bit and you move on to autopilot. You stay on autopilot until the market kicks you in the arse. When the market kicks you in the arse, it brings you back down. I know what to do, and I forgot the market kicks me in the arse. Yeah. So read this. It's very short. It's 7 pages long. Yeah. But this is the stages everyone goes through. And what people are doing is they're jumping from here or here to this, missing this bit. This is the bit that you need to know. If you skip that bit, you're screwed. You're screwed. Every single course in the world immediately takes you there or gives you that without giving you any of this stuff in the middle that is actually what makes you the money. Understanding how this thing works, why it works, what drives it, what happens. And that's why I wanted to bring the Aussie New Zealand up this morning, because it's a prime example of, and I've posted this to people who have asked about it, this, if you got in long there, yeah, you got in long there, you didn't get out. And that started on the 29th of September and ended at Christmas. September, October, November, December, you didn't get out. Do you know how to deal with it? If not, learn. Very, very important, because this is coming. It's going to come again, and it will come every year, multiple times, and you've got to be able to deal with it. So I'm going to shut up. Have you ever considered my Forex Fund's accelerated accounts, Adrian? I haven't. No, I have been tempted. The problem with the accelerated accounts is they're expensive. And that really is the only problem with them. So to get the sort of funding that I want on a prop is going to cost me $2.5 grand. Yeah. So remember what happens with these, with all prop accounts. You will at some point hit that max daily loss, hit that maximum loss, or whatever it may be. But whatever the rule is that will take you out, you'll hit it. I don't know when I'm going to hit it. So if I pay $2,500 to instantly get funded, the chances of me passing, getting that account up to 5K to make some money are exactly the same as if I took 10 evaluations, got 3 of them over the line, and then 1 in those 3 got there. Except this way of doing it, I have more chance of getting more accounts over the line and having more accounts available that I can spread my trades and my risk across. With this, I'm literally paying $2.5 grand to buy $2.5 grand's worth of drawdown. What I might as well do if I was to do that was to put 2.5K into a account of my own and then leverage it up and take 5% risk per trade. It's pretty much the same thing. If I blow the prop by paying 2.5 grand, or I blow the account by paying 2.5 grand, it's the same thing. This is my capital and I've got complete 100% control over this. This, I have no control over. I have to stay within their rules. Or 12%. Yeah, which is strangling me. So you're better off, I think, not doing that and doing evaluations or compounding. Yeah, we've talked about compounding in here before. Compounding works short term. So if you took 2.5 grand account, you could compound that up to 5K within a week. You could compound that 5K to 10K within a week. So within a month, if you had a good run of compounding, you could easily take a 2.5K up to 25K. However, the chances of you blowing it are very high. You need a good lucky run. The market conditions we have at the moment for compounding are absolutely spot on. Absolutely spot on. I don't know what they're going to be next week. You see what my point is? Yeah. Yes, I've been very tempted. But I look at this and go, well, I could buy myself a 10 grand account for $485 and go straight into funding. But realistically, what is my income from that going to be? Somewhere between $500 to $1,000 in a month. It's not really worth it because I'm only going to return somewhere between 5 to 10% return on this, because you can't do 8% a month, a week, a fortnight, can you? You can do it in evaluation because you're told to do it in evaluation, but realistically, you're only going to return 500 to 1,000. So if you only need to make that, then that is probably not a bad thing to do. I've thought about buying 3 of those and getting a 30K account, but I've got a 30K account in real money. So this is, but I think for other people, maybe, yes. If I had 1,500 to trade with as my starting capital, I think I would probably invest it into 3 10K accounts, or maybe a 20K and a 10K to get myself that 30K. But you've got to stay within that drawdown. So from a position trading perspective, it's just too difficult. But if you've got a really good stop loss strategy, if someone's got a good stop loss strategy that you can trade low risk and has a high strike rate and has a low drawdown, these are probably a fantastic option. But you've got to have one of those accounts with a massive strike rate, and that I'm not sure about. So, but I don't know. I like them, but you can, if you go to CTI, they have direct funding, which has a scaling plan attached to it as well. So their 50K accounts are $3,000 So they're $500 more expensive. And the way that they work is with this 5% absolute. So there's no daily drawdowns. You've got no leverage either. That's no use, is it? It's no use. I thought City used to have a better one than this. I thought it was better, but it's not. No. But yeah, I've not for me. But they're good. You've just got to be very, very careful. Bella, yes, show us the money. Exactly. Stevie, I've watched all the boot camps more than 4 times, and I recommend all traders to watch it all in many times over. Yeah. All the courses that I've ever taken that I've found a use for, I've watched more than once, and every time I've rewatched those courses, I've picked something new up. And it's the same with mine. Mine's 12 hours long, and you will miss so much on your first run through because there's a lot of heavy information in there. Yeah, it's not fun learning, is it? I try and make it as fun as you can, but you can't. It's boring stuff. Yeah, it's like you can't make something boring exceptionally fun, can you? A lot of the time. So you'll miss stuff. So you've got to run through it a couple of times, I think. So the first run through of everything, you go, right, I'm going to try this on demo. And then if you were to watch one video over 2 days for another week, you would cover the bootcamp again in your first week of trading. And then, I have courses. Well, I had courses. I don't do it anymore, but I had courses I used to watch over and over and over and over again because they were brilliant. And it was one of those things I wanted to remind myself of all the time. So every morning, I used to have a little. I don't think I've got it. I used to have a little PDF that I created. No, I haven't got it. Well, I probably have got it, but I've got so much. I've got a trading folder, which is like hundreds of gigs of stuff. But I used to have, I can't remember whose it was. It might have been an ICT one. I think it was this one. Yeah. So when I was trying to study ICT stuff, I made all the important bits, and I would whiz through it every morning. Yeah, all the important slides of his main strategies, if you like, trying to understand them. And I didn't get anywhere with ICT, so I dumped it because I couldn't. But I've just noticed that one because I had it. But all the main courses that I did, I made one of those documents, and it was a document that you could open up every morning and just scan through and just remind yourself of all the key stuff, the key important bits. You can do this with the PDF, the Position Trading Bootcamp. So this is the PDF of the entire course, which is 168 slides, I think, 191 slides. So you could pick the top slides that you think are the most important to you, because everybody's going to pick different things. But and just have a PDF with just maybe 5 or 10 slides in it, which is like spacing. So how far apart you space, exposure, all the different bits that you think are important, and just open that PDF up every morning when you open up the charts, and just scan it. Literally takes 2 or 3 minutes to scan it while you're having a coffee, or while you're waiting for the market to open, or while you're waiting for me to come on, or something. I don't know. But if you just scan through it, I've got summaries in there. So to summarize, forget pips. So if you're constantly going, oh, there's 30 pips, 30. If you constantly concentrate on pips, just have that in there. But it stops you making stupid mistakes, and it's great. So just something like that. Yeah, just to remind you how the market works. Every time the buyers buy, they sell. Every time the buyers buy, they sell. Every time the sellers sell, they buy. Every time the buyers buy, they sell. This just reminds you in one very simple slide how this entire market works, how the institutions drive the price. So if you had that slide in there, it's like I've got 3 positions short on this, and it's been doing that for 4 days. And then you'll look at that and you go, well, that's coming next. And you'll suddenly go, oh, I don't need to worry about it, do I? And that thing that you're going to concentrate on all day is gone because you've seen this slide fly past in your 3-minute pre-market sort of scan of content. But there's lots of visual stuff in here, you know, about times, you know, multi-time frame analysis, you know, zigzag, how multi-time frame analysis works. You know, it's all in here. Everything, literally everything from the bootcamp. This one, there you go. It's what we've been talking about this morning. I just saw it fly past. The effect of drawdown on different time frames and stuff. You know, but anyway, you get the point. What's that gold up to? Not going anywhere yet today. Waiting for the US dollar news. I've posted the H1 hedge trades from my trade manager and happy for comments on it in the Telegram group. Cool. GL, is there any videos on how to set up a VPS for when we are out of the house? Well, you set up a VPS forever. You don't, not for when you're out of the house. You just, the VPS is running 24/7, 365. But no, there's not. It literally is a Windows computer. So all this is a computer. It's a Windows PC, yeah? So all you need is remote desktop. So you buy a VPS. If you want a good VPS, there's one on my website up here. That's the VPS guys that I use, VPS Forex Trader. That's an affiliate link, by the way. I'll own a fiver. And literally all you do then is you launch remote desktop on your PC. So this comes in Windows. You connect to your server. And first time you log in, you'll be presented with that. You'll have nothing. So literally you just download MT4, install MT4, off you go. For use on your phone, I don't know. I don't trade on my phone. I don't do anything on my phone. I can't do anything on my phone. It's tiny. I can't do anything on my phone. What about gold? Anu, I've already covered gold. Main problem, no trades over the weekend. My Forex funds double every 10%, do they? Okay. What on these, do they? Yeah. Like I said, I've said it here again many times. Very, very few people will ever get anywhere near scaling because the number of people that hold an account for more than two months, i.e., they get to their 3rd monthly payout, is less than 1 in 10,000 or something, ridiculously low. Because you will hit one of those issues along the way. So, World King, this platform I search, but it is too expensive. What's too expensive? What, VPX Forex Trader? Too expensive? Is this what you mean? It's $18 a month to run 4 MT4s. I have to ask the question, Welcome Top. If you can't afford $17 a month for a VPS, how the hell are you trading? This with funding didn't understood that. This platform I searched, but it's too expensive. Are you talking about my Forex funds? Yeah, so that's what I mean. I don't use that. I use normal prop, which is a valuation. So I use 50K and 100K accounts, which are $300 and $500. What about gold? I've already covered gold, and I've already answered your question about gold. I'm short on it. I'm short on gold. That's me. I flipped my coin and I've gone short. First, it's tools in your account that you post it. I don't understand what you're saying. Sorry. Not sure what you mean. Aussie Swiss, I've covered everything. We're at the end of the live room. Everything's covered. Go and watch the replay. Click through the replay and you'll see me. As soon as you see Aussie dollar Swiss come up in that top right hand corner, stop and watch it. It's not doing anything at the moment. There are no opportunities out there right now. You've got one opportunity on New Zealand, which is an ADR hit. You're going to get a 5-minute reversal there. I've just taken a short of it manually. There are no RSI extensions apart from Euro Swiss. Yeah, which is a long, which has had a reversal already, straight out of resistance support, which I am also long. Not because you have money, you will pay the something overpriced. Hyonix is way cheap. Not because you have money, you will pay the something overpriced. Don't know what Hyonix is. Windows VPS. $24. Yes, they're not much different price. But I mean, you can use whatever you want, obviously VPS wise. The only reason I use Forex VPS is because these are optimized for MT4. So it doesn't matter, does it? Any VPS will work. I had this conversation in the Telegram group about VPSs yesterday as well with someone else. I don't really have time for people that are squabbling over £5, right? If I dropped $200 on a VPS tomorrow, does it matter? No. If I drop $20 on a VPS, does it matter? No. If you're trying to make money with so little amount that you can't afford the difference between a $13 and a $25 VPS, you need to go and get a job, because this needs 100 grand in capital to start this job. 50 grand, 30 grand, 10 grand if you really want to take 6 years to get to yourself to any money you can afford to make a living out of it. Yeah. I know everybody wants to become a multimillionaire and drive a Lamborghini, but if you haven't got 100 grand in the bank, you're not going to do it. Sorry, hard fact. But if you're squabbling over the fact that one VPS is $6 and one is $13.99, you've got problems. And the problem isn't the VPS. The problem is you haven't got enough money to trade with. Isn't it? Really? If you think about it. Anyway, I'm not going to go into that. I've been into that many times before as well. Jigsaw trading, World King. Sorry, what were you talking about? The platform I search, but is too expensive. Jigsaw. This is for futures trading. This is for the futures market. Yeah. So if you're trading futures, yeah, this is the software you want. But I would say if you're going to trade futures, you need to do a futures trading course. You need to understand this. This is massively complex compared to CFDs. So it's a lot more difficult to trade futures than it is CFDs. So I would probably steer clear. Concentrate on FX. This is an in-out scalping platform, which is hard, very hard compared to trading CFDs. Max, can I still jump in on Euro Swiss? Yeah. If you want to, it's extended. So if that doesn't work, that will work. So yeah, I mean, you can get in. The reverse alert you've just had on M5. So you could wait for a retest if you want to, or you could jump in now. It depends how long you're looking to hold it for, but you know, it's either going to bounce there where we are now, and we're going to push up. There's no targets to the upside really, apart from this stuff up here, which I'm not convinced we're going to get back to, but we might do. We probably will. But the reason I don't like this is because of this down here. There's much more chance of us coming down here, I think, at the moment on Euro Swiss. But right now we're pushing up into a propulsion gap, which could well act as a big sell, couldn't it? So I don't know. There's no news catalysts. We've got no news catalysts on any of this for literally 2 weeks. Euro and Swiss, there's no news coming up. So this is literally going to be driven by wherever they need to take the Euro and the Swiss, but there's no fundamentals coming up on it at all. So it's very difficult to pick a direction on it at the minute, I would say. Come on, gold. I'm waiting for gold. I feel like I'm forever waiting for gold. And the pound to drop as well. I need the pound to drop. Right. I will leave it there today. If there's anything you need, let me know. I will be back tomorrow at the same... No, I won't. Scrap that. I won't be back tomorrow. I'll be back on Tuesday because it's bank holiday in the UK. So we've got bank holiday tomorrow in the UK and on Monday. So I won't be here tomorrow at all. No morning session, no afternoon session. I will be here this afternoon at 2:20 for the New York session, but I won't be here again until Tuesday morning next week. All right. So just remember, I'm not here. I know people will post in the Telegram group. Is there no live stream this morning? And I will post in there that there isn't one. But so yeah, today is the last London session until Tuesday. So if you are having a bank holiday, good luck. Hope you enjoy. I say good luck because I live in the UK and it's all about the weather. So I say good luck with the weather because that's all it is. So yeah, bank holidays today, tomorrow, everywhere apart from the US dollar, and the same on Monday. Everywhere but the US dollar, and Canada don't have bank holiday either. But so yeah, so I won't be around for unemployment rates tomorrow. I will be keeping an eye on it, obviously, because we're going to get some movement off of that. So do be aware of that if you're not coming into the live room this afternoon. We are going to need to prepare for that. We're going to get some movement off the US in all likelihood, obviously. So I'll be back on Tuesday. If you need anything, I will be in the Telegram group. You can always come in there anytime you like. Other than that, I'll be back this afternoon at 2:20 for the New York session. So hopefully have a good morning. And if you're here this afternoon, I'll see you then. If not, I will see you on Tuesday. All right, have a good one. I'll see you then.